I literally realized I forgot to hit the live button earlier. So I'm gonna have to redo the intro here, unfortunately, for those that are just watching again. But yeah, we are live now. I changed the title, everything. We are gonna do the optimization today of going over my trading journal of about 680 trades. And I'll go over basically how you can improve your trading, optimize your trading strategy that you have. Everything else should be good right now. But yeah, this will just be a free lesson I'll keep on the YouTube. Don't know if I'll convert it to a YouTube video or not, but I might. But I guess I'll also hit start recording in a bit if we get enough people to join here. Or if we don't, just post this YouTube video. Let me move OBS over here real quick. But yeah, hopefully you guys do see the webcam. New lighting setup for those that are wondering. Okay, I have the light here now on. Let's check out if the bot works here. But I do have the light now up here. As you can see, the light is up here now. So better lighting, less shadows. And then also my mic is here now, so the mic quality should be better now. And we also got stream chat. So I do have to add a bit more aesthetic things to the streams likely, but I do have a few different things set up now. So hopefully you guys do enjoy the better quality videos. That's what you can expect in the future on this channel. So yeah, let me figure this out real quick. But we so far have 3 people watching. If the background music is loud, let me know, y'all. But yeah, we'll be getting into here just in a minute on how to optimize your trading journal. I have mine pulled up, as you can see right here. Okay. Matter of fact, let me move this to the other monitor here. It's probably easier if I look this way at you guys. Okay, do you guys see that? And let me test if the spot works here now. Okay, perfect. It does work. It's working good. Okay, cool. So we'll just create a few columns in the beginning here. Again, if you guys just joined, we're working on optimizing our trading strategy. So over here, I'll have my average risk reward column here. And here I'll have the win rate. So, and then here will just be your filters. Or you can call optimization, whatever you want. So I'm gonna make these bold here. This is my first time doing this, so I might have to figure some things out, but I do have the journal here for those that are wondering right here. And these are basically, this is basically the risk reward average from my, well, I think the music is distracting. I'm gonna turn off the music. But these are the risk reward averages from basically from my entry models I teach within the course. So we'll be using these, man. We'll be using these. So for example, this is one of the formulas you can just use. I'll copy and paste this here. There's a way, so since this is for risk reward averages, I'll just cut this and then I'll paste it back to the optimization section. I'll put this here, but obviously we have to change some things, right? So I have to look this up, but there is a formula to change it so it's referencing another subsheet here. Let me see if I can find it here real quick, y'all. Okay, so if you do like IFG here, and let's put the other entry models. So we have IFG is one of my entry models. I have the OB entry model. I have the Impulse entry model. And I also have Stop Hunter. So for example, these are filters, right? And with these, I'm trying to filter basically my average risk reward with each of these entry models I've journaled. And then I want to see the win rate percent. This is very straightforward. So this is before we like optimize and look into like trend and all sorts of different columns you guys can add into your trading journal. Like for example, look at all these sums or columns I have in my trading journal. Guys, this is literally across like 600 plus trades I here journaled, right? You can optimize your break-even systems, all types of things here. Okay, the bot is kind of spamming a little too fast here. I'll have to change the timer later of the bot, but you guys can see here, this is my 600-ish trades I've taken live. And then, for example, let's go back to here. And then we're gonna have to change this. Instead of having this here, all we have to do here is just change this reference to just this. And then it should be good here. Now we also have to find the reference formula to reference another subsheet. I get confused sometimes because I'm used to doing Excel and Google spreadsheets, so I have to switch between the two sometimes. Let's change the timer here with the chat bot here. It's sending the message a bit too often. Let's go to make it every 20 minutes. Okay, cool. Then to reference another sheet, we just have to do, okay, so if we want to reference M to M range, which is the entire M column, we would have to do journal, I believe it's this here. I'm at the, in GG, we also have to do that as well. If you guys are familiar with Google or Excel or Google spreadsheet, let me know. And we have to do this too as well for this. And then this should work here. Let's see if it works here. Nope, it does not. Okay, we have to figure something out here. This is greater than 0 because we're looking at the average risk reward for a winning trade. So we don't want to include the negative risk rewards of -1. See if we can find the example here. Journal, it should be this. Must be something I'm doing wrong here. Let me copy and paste this real quick. And I have tons of optimization videos already in the course content. If you guys have the course and have not checked that out. So definitely I would recommend you check that out if you haven't already. Okay, while we try to figure this out here. Wait, why do you have A2? Oh, you're right. Never mind. That's, we don't need this for A2. That's just this. There you go. We don't need that. There we go. There it is. So we just have to do sheet name and an exclamation mark and then the range. So that's how you get a step sheet. So yeah. So this is how you can basically get the risk score now into this section here. And basically all you do is pull these down because this is going to reference A3 now, and this will automatically reference A4, which is impulse models. So here's the average risk score. You can compare it to what I have here is correct here. So, and then here's the OB entry model right here, which obviously is also the same. And then right here, we're going to round these numbers. Oh, we're not going to round like that. We're going to go back. We'll go 2 decimal places. Let's see how close these numbers are. Yeah, we'll go to 2 decimal places. I think 2 decimal places is pretty good. My website for the EV calculator, I think it only goes to 1 decimal place here. Yeah, it only goes to 1 decimal place. I'll fix that later in a bit, so you guys can have 2 decimal places if you guys want to just get it more accurate for your EV. And then, matter of fact, while we talk about EV, let's just do the EV calculation here. So it'll be this number times the win rate. So you'll have your win rate here. And then we can put this in parentheses here. Then we can subtract. Basically what you do is you subtract just because you lose 1, so it'll just be 1. And then I believe it'll be, actually you don't even need to multiply by 1 here. You just do 1 minus the inverse of the win rate. So whatever the win rate is. So we'll drag this down here. So like for example, if you have a win rate of 30% here. Okay, no, that is wrong. Give me 1 second. This is not right. It's because it's using this win rate as as 30 instead of a percent. So we have to convert this here. Not like that. Okay, we'll figure out how I want to calculate the win rate percent here. Because the EV is basically 1.28, which if I go to my website, it should be that. So if you have a 30% out of 3.3, yeah. Oh, what? There we go. There we go. Yeah. So you have to have in decimal format, which we have to convert here. So we have to convert this C to the decimal format. Okay, let's see if this works here. Do text and then format. We're gonna do 0.000. I might need to put parentheses here. Nope, that doesn't work. Does it convert to decimal? Oh, I'm not trying to round it to decimal. I'm trying to convert this to like percentage. Okay, let's undo that. Okay, this should work here. Let's try it. Nope, does not. Should convert this to percent. Ah, do the same here. Okay, and then would it work if I do 0.29? I think this is converting this whole entire thing to a percent now, which is worse. All right, we'll just have to manually do it. So your win rate at 30%. We're just gonna have to do this. Let's see if it does PEMDAS correctly here. There we go. We're just gonna divide by 100 each time individually. Okay, perfect. So then let's say you have a 40% win rate here. That's your EV. Let's see if this is the right EV here. 4.8. 4.8. 4.8. There we go. It is right. Okay, and then we'll round these also to... We'll round it to just that. That should be good enough. Obviously, this is negative, and this is divided by 0 because Stop Hunter, I name it S Stop Hunter. So I have to change this to Stop Hunter exactly. It's not. I don't think Google Spreadsheet is case sensitive, so it's not a huge issue. But what's up, Seto-san? Keep up the work, bro. Appreciate it. If people can't seem you trust you in lives and trading, just not for them. How many people do you have on here? We have 4 people. Well, as long as this helps some people, I don't mind streaming. So, and obviously this video should be up as long as we don't have any copyright, guys. Again, if you guys just join the free Discord. Okay, it's linked and it's pinned. Join the course as well. We have only 2 spots left for the Advanced Hunter Risk course. So if you're trying to learn how I trade, join the course now before the 2 spots are taken away at the current price. They're not going to be at the current price for long. So just something to keep in mind. But yeah, today's stream, we're just doing optimization of your trading journal. I recommend you guys all have a trading journal if you're not profitable. If you're profitable already and you've done this for years and years like me, sure, you don't need to have a trading journal in a sense anymore. But if you want to optimize, this is just a free course for you guys to learn how to optimize, right? You first, before you even get to the optimization part, you want to journal and track all your trades. So I have about 600 trades here journaled, okay? 600 live trades journal here. Here are my stats for each one. If you're wondering, this is on all pairs, about 111 active trading days. And then these are all the setups here. Win rate for each month, things of that nature. But yeah, you can see session breakdown, everything. Now here for the optimization, we're just trying to figure out the stats of not only each strategy, but also different types of filters and columns. So that's what we're doing right now here. So for the win rate, all we have to do here is just take the average. We would have to look through W and L here. So we have to go off of this, but I don't know if this is gonna work because this is a formula here. Let's see how we can do this. Okay, so if you just get rid of these for a second here. There's 2 different ways we can approach this here with the win rate percent. One way we can approach it is using counting numbers that are not zeros, because zeros are neutral, but we can consider basically numbers that are above 0 as winners, and obviously -1 is losers. So we can filter it through that way to just have a win rate filter, or we can try a different way, which could be a little bit more easier here. But I think honestly using numbers here would probably work better, just because these may not convert properly. But let's see if they will. Let's see if they will here, because yeah, we'll try those first real quick. So it would be, for example, like count ifs, and then we have journal. I believe that's how you do subsheet, if I remember correctly. Then we would have something like, we use and column. So from end to end, We'll make it static. And then the criteria would just be, hold on, let me think. It would have to be this, I believe. Because that's the specific thing we're looking for the win rate for. And then we have to then use oh, we have to look through G. What am I saying? We have to look through G to first filter out IFGs. And then we use N because that's a column for trade outcome. And for here, we just filter out based on the numbers. So anything greater than 0 is positive. Actually, I'd probably do, yeah, no, it has to be greater than 0. It can't be equal to 0. And then from here, we can just divide this by the count ifs of the same thing here, essentially. And then you would divide by, so this would be A2 still. And then from here, you just go with N. And we'll see if it works using this approach. If it doesn't work with this approach, we'll use the other approach. And as a matter of fact, I messed up here. So it should be divided by L. And this is not greater than 0. This is the other approach, would be W. See if that works there. 2.5. So 2.5, wait. Hold up. GA2 journal else. Oh, I have to divide by all trades, not just those. Okay, so you have to divide all the winners, divide by losers and winners together. So let's see if it works here without parentheses here. I'll just copy and paste this here. Then we do winners. And then you don't ever include break evens. Okay, so this should be the correct win rate. This might be wrong. Oh, my journal here, the calculation here is 71%. Okay, so there's something we did wrong here with the way we calculate this. Putting parentheses here, change anything? There we go. There we go. Because originally, I believe it was doing MD. So originally it was dividing this by this, which we got 2.5, and then it was adding number of winners, I think. But once you put this all under parentheses here, this would be all in the denominator, this would be in the numerator. That's the win rate here. So it does match. So I did get it correct just to make sure here to match my stats here. So the win rate there is correct. I don't expect too many people to be watching the stream just because it's more boring than price moving live, you know. But you know, feel free to watch in your free time if you guys don't have time. Anyway, let's change this to, let's go back here. We'll use this, and then we don't have to divide by 100 anymore here, because it actually has it perfectly for us. Matter of fact, we should probably convert this to percentage. So let's convert this entire thing to percentage. This here should just be number, we'll just keep it like that, and then you don't have to divide these by 100 anymore because it should just convert based on a decimal. So 71%, let's do the math here real quick. 71% win rate at 3.3 risk reward is 2.07 EV on my website. So that is correct. And then all we have to do now, this is the easy part. All we gotta do. These are not static. Yeah, none of these are static. Oh, wait. End to end should be good. Let's test it real quick. Okay, yeah, so these should be good here if we convert these. Let's see if it matches right here. 60% OB entry model win rate. The impulse model, we got an 80% win rate, so it's the same, and the stop hunter should be 72%. All right, sweet. So we got perfect stats here. And I think it's because these are not... Okay, there we go. So it's wow. Exactly 72%. It's because we have 84 trades. Okay. All right, so those are the win rates here. And maybe we might just honestly just use these. I don't think people care too much about 2 decimal places. We'll go with 1 decimal place. And then EV, we can go with 2. And I believe if we just do this, it would round it. Yeah, we can go with 2. And why are these? Oh, these are negative because we have to convert these again. And there we go. So basically what you guys are seeing here is the EV, which is a pure performance metric of my strategy. And you can see just using this optimization here. This is not even optimizing, guys. This is like very basic stuff first. We're just basically filtering to see what entry model works best so far. From my trades I've journaled. Remember, you want to collect data first. You need sample size. Otherwise, you can't really do this without any sample size. But if you have at least a solid amount or a little bit of sample size, it'll work. So we could probably delete these here. Since these values are correct here, we'll just delete all that there. But yeah, again, if you guys want access to your trading journal here of all my trades here, check out the WAP. It's like $97 and it's on sale right now. And you can just look through my entire trading journal. I have everything journaled here. You'll get access to like the setup stats, rules counter, optimization, which is basically added right now. I'm literally working on it right now for you guys. And you get basic access to everything here, man. Everything journaled, all my comments on each trade, things of that nature. And this is basically kind of what you want to do with your trading journal. Now, I know some of you guys use Notion, which is cool. Notion is cool. I just went back. We used to use Notion. I went back to Spreadsheet just because I found it to be easier visually, in my personal opinion. So I stuck with this, but you can use Notion if you want to. But yeah, if we're just looking at pure EV here, guys, today, you can see my impulse model actually outperforms all of these. Now, usually it wouldn't. And the reason why is because you need context. So this is just going off entry models. So let's get rid of impulse model here. Look at the other steps. You can obviously see, I'm not surprised. My OB entry model gives the best EV here. And the reason why, you can see it's a lower win rate than IFG, but look at the average risk reward. You get precise entries. You can even double the risk reward, but you will miss 40% of trades from my batches of data, but you can double the risk reward here, literally no joke, to a 9 risk reward average with my OB entry model out 60% win rate. And your EV would basically be skyrocketing. 9 RR average with a 60% win rate is insane. But I don't trade with that optimized system just because I would be missing half my trades I'm taking. So I would be missing a lot of trades. That's a 5.0 expected value using my website. So yeah, it makes sense. It's double. So I would be missing half my trades. Therefore, I'm not going to ever double my risk reward here using a tighter stop. Or not tighter stop, but tighter entry. I'm literally cutting my entry model in half because I found from my journaling that I can cut that and still take these great trades. So it's not worth it to me personally because I miss out on 40 to 60% of trades. So I keep it like this. But still, nonetheless, these EVs are very good here. I'd say anything above 0.40 is profitable live, including commissions and spread. If you can get it above like 1.0, you're doing it extremely well. That's equivalent to 100% win rate at 1-to-1. Obviously not the same drawdown because 100% is 100%, but you guys get the point. Car said, can you share an outline for the Excel? It's on my WAP. So if you want to outline to what I'm working on right now, you get access to my entire strategy here in the sense of you get to see like the trades journaled here. I have everything journaled here. 600 something 30 plus trades I've taken in the past live here. And then obviously I have everything journaled here. If you want to access this entire thing, it's on my wallet for like 97 bucks, I believe. So you can check that out if you're interested in getting access to it. But yeah, that's what you get. And then obviously I have set ratings. That's a new column I added, so I'm still going to be filtering that out, but this is all the way up until March. And I stopped journaling after March. I explained in another video why. So feel free to check that video out if you guys are interested. By the way, I passed the eval. Good stuff, man. Good stuff. First eval pass, or thing is, I don't want to say good stuff because passing the eval, I don't want to be mean, but it's not too hard. I'd say, you know, getting a payout would be like, for most traders, probably 5 times difficulty. I mean, you can look at the statistics from these prop firms, they post them. I don't remember the exact numbers on top of my head, but I believe it was like, even like the people that pass evals, was it like 20% get to pay out or less than that? So only a fifth or even lower than that. So definitely you don't, you know, keep your head down until you get that payout though. So yeah, just keep working. Okay, so these are filtering with the entry models. We can even split this up if we want. We're gonna, you know what we're gonna do here is, I'm thinking of an idea to make this more efficient. Okay, let me move the camera down here a bit. Let me tilt it down a little bit. I'm trying to think of a way to organize this data so it's more efficient here. Damn. Okay. We could have separate different columns for filter, or we could have it all in one column. So what I'm thinking is, if we have different columns for each one, these filters, I'd have to add another filter here, and it would be very specific to the entry models, so I don't think that would be a good idea. So what I'm gonna do is we'll just keep it as one column for now, and if later we need to expand, we will do that. So these are the entry models, right? So we can, I probably should have done this. Let's add a new row above here. We'll just separate them for now like this. So these are filters based on the entry model. So let's say you only want to trade one specific entry model and you want to test which entry model works best for you. You just collect good sample size, at least 100 trades. I have 630 taken live here, right? These are not back tests, these are live trades taken. And then you can just use the template I have right here. But if you want to just make your own, you can as well. It'll just take a little while because this is quite a lot of work. But the formulas, again, are all on the stream here for free for you guys that just want to, like, you know, that already have a journal maybe and you just want to copy them. So these are the entry models, and then next what we can do is filter based on, okay, so we can filter based on, let's see, for example, let's say you want to filter based on, I already have this filter, but pro and counter trends. So for example, if you guys look here, I stopped journaling the pro and counter trend for a little bit after 300-ish trades, or wait, when did it stop? Around 400 trades, just because at that point it was a ton of data and it wasn't, there's no need to continuously do it at this point because I already have like good sample size, but we'll do that for the sake of this stream here. So what we're gonna do here is we'll name it confluences here. So one confluence is you use external trend, internal trend. Oh, I should have recorded this. Okay. It's probably not going to be the best quality when I post it later. But yeah, so some of the confluence would be external and internal trend, for example. And then what you can do is we can just calculate. You can calculate the average risk reward for these if you want as well, if you're curious about that. So for example, you just copy and paste this. And obviously we want to use A9. Bro, what? A9 here. And then we have to change, we keep the same subsheet because it's the same subsheet, but this time we keep this ending part the same. That's the risk reward. And then this is the range. This is the criteria range. M and GG. Oh, M is the risk reward. Oh, I see. We filter the risk reward twice. So average range is basically what your like the output is, which is the risk reward, and then here there's the two filters. So one of the filters, obviously risk reward has to be above 0 to get the right RRs. And then here, since we're using external trend here, we want to be using this J. So we want to use column J here. Now I messed this up here, which I'll change in a bit. You guys probably understand why. This should be called Pro. So we'll have to fix a title here since you may not completely understand what Pro means here. One way we could do, okay, here's a way we can fix that. We have to just, instead of referencing the cell, we're just gonna have to do it manually. So external trend, and then instead of A9 here, referencing that, we'll have to do, well, we'll write Pro. So we'll have external trend here. So we could write something like Pro. And then you can write your external trend again. If you don't know what Pro external trend is or what that means, check out the course. I teach how you can distinguish between internal trend, which is internal structure, versus external trend, which is external structure. There's two whole different things in trading, and you must be able to distinguish between the both. Otherwise, your win rate will drop a lot. So I recommend you guys watch that video if you haven't in the course. So we have external trend Pro and we have external trend counter. So we'll move this over here to a bit. So here is just referencing Pro, and if we go bring it down here, all we have to do is just change this to counter. And Excel is not case sensitive, so it doesn't matter what your case is, right? Counter. And then now let's say we want to get internal trend Pro. So for internal trend Pro, just drag it down here and I'll name this counter. All we do here is drag these, and then instead of J here, so we can just copy and paste this here because this Pro, this is counter here. Instead of using J here, you're using I. So we'll use I here. And move the mic down just a little bit here. Do you guys hear a difference between the mic quality? I have it next to my face or mouth right now in front instead of originally which it was on the table. If you haven't seen my 7-figure day trader setup video, I posted my setup recently. It's honestly, you'd be surprised. It's not complicated. You don't need a lot of things to be profitable. All you need to become profitable is this, your brain. It's just knowledge. That's it. Knowledge and experience is all you need. You don't need anything else. So contrary to what most people think of trading on the beach, that's not a thing for me. I trade basically, I keep trading professional. So I treat it literally like a job. Yes, I don't work the same number of hours as a job. I can do whatever I want after like 11-ish, but I treat it as a job in terms of I take it seriously. I have a work office that I trade at, right? It's not in my living room. I trade in a work office, and I just have a setup specifically just geared for trading. Okay, so this should be good now. This is going with counter trend with the I column here. That's a risk reward average. So you can learn some pretty surprising things by just doing some basic statistics and data collection here. Like my external pro trend setups, the average risk reward is slightly more than the internal pro trend. In terms of difference between these two, it actually does not matter in terms of these two. And if you know the difference between the external and internal trend, you know why. We can probably call this, yeah, I'll just name it internal trend. I was going to rename it to external structure and external structure, but trend makes more sense. And then you can see internal trend counter, surprising, came out with more risk reward. So, but for the most part, you can understand counter, you'd get slightly less risk reward. It's honestly, it's not significant enough. A 0.14 difference in the risk reward average between these two is basically not significant enough, so it doesn't really matter to me. So this is insignificant data here, doesn't mean anything. But let's check out the win rate now. Okay, so guys, let's check out the win rate here. All we do is the same thing here, except we had to use this formula here because it's win rate this time. So all we can do is copy and paste this here, except we have to change some things. Instead of using A3, we'll have to go with Pro here. And instead of G, I believe this is J. Yep, external is J. So we'll go through J. And then these are obviously wins and losses, which is fine. Everything else here should be the same. No, this is not the same here. Okay, we have to change these as well. So what I'm going to do here is just copy this. Paste it here. Paste it here. And that should be good. Let me check to confirm here. So, okay, based on, it's a 70%. Hold on, if we go back a few decimal places, it is 69. So that's round to 70% of pro external trades taken. That's my win rate for those. So I have some optimization here already, kill zone and outside kill zone as well here. But I think it is best, obviously probably cleaner to have it all in a separate subsheet and just keep your stats, right? So we'll keep it like that. And this should be good though. I'm just making sure here this is right data here. Journal, pro, yeah, it should be good. There's a counting number of losses considering this filter here of pro inside today. Now end to end is just a wins and loss column. So N is just trade outcome. We don't consider ever break even. So break evens are neutral. That's not within the formula here. The formula is just total wins divided by the total number of trades of wins plus losses. So we bring this down here. We have to change this obviously. So this would be counter. And we had to also change this. So counter. Okay, so data is basically correct here. It's because this is not rounded. So if I go here, well, we have these in full percentages. Honestly, if you guys prefer, you can keep them at full percentages. It's probably easier to read. I might actually just do that instead. We'll have these rounded because point and decimals in terms of win rate should not make that much of a difference. Especially because trading is a game of law of large numbers where basically like point differences and or decimal differences and a huge sample size basically is insignificant. Sure, you can say maybe it might like cover spread commissions if you're trading like Forex, for example, but it's, to me, it's not that significant. We'll keep it rounded here. Now we change the J's to I because now we're looking at internal trends. So here we'll have to change all these to I. Have to change all these to I. Okay, there we go. So that's the internal win rate, internal trend pro win rate. And let's collaborate the data here. It is correct. So 75%. And then last but not least here, all we have to do is just change this to counter. Now there's going to be a few more things I'll do on stream. So we'll change this to counter. This would be counter. This would be counter. So it'll be 58% here. That is the correct win rate right there. Okay. Now I'm just making sure, is my webcam blocking anything, y'all? I don't think it is. I think it's fine. Yeah, it should be good. All right, bet. So here are the stats here. It matches basically what I have here. And then of course, if we want to just bring in the kill zones, we can just add that as a confluence here as well. You know, if we go to the kill zone, the filter is inside and outside. So you do something like that. And then I was thinking there might be a way to simplify this. If we have a drop down tool. We have a drop down. Okay, no, we'll keep it singular like this for now and separate everything. And then later if we need to complicate it, we can. So it's the same deal here. We have to just change this to inside because that's what it says. And then this is the risk reward. We don't change that ever. We change it from I to C because that's what it's referencing here. And why is it divided by 0? Inside. Wait, it shouldn't be divided by 0. Am I tripping? Journal M to M, that's the risk reward, yeah. It should be good. What's wrong here? Let me try this again. It should work here. I think something's wrong. Yeah, it's C. Evaluation of function average caused the divide by 0 error. That means it's not collecting or looking at any of the data here. But if we have inside and outside here, it should collect it. It's also not case sensitive, so this should not matter. That is weird. Okay, I'm gonna have to look into this part. See if outside works. It's probably not going to work here. Seems like something wrong with the C column here. It might be because C column is locked here. If it's a locked column, you might not be able to access it. Okay. Alright, I guess we won't be able to do this for now. Inside and outside kill zone. Don't know why, but it's not working. Okay, since this is not working right now, I really don't see a difference. So no difference here. How's this not working? See. Oh. Wait, no, because I don't have data here with these, but internal and external trend worked. Interesting. I'll have to look into this. I'll have to look into this. Let's go over to, let's see if the win rate works here. If the win rate also glitches here, it's something to do with the properties of the column. Okay. We keep the N columns or M or N because that's win rate or the trade outcome. We never change those. We just change these here. I want to test something out here real quick. Let's divide by 0. The column probably has an issue. See, this is some of the stuff I feel like a lot of people don't want to do in trading. Everyone likes dopamine hits or dopamine hits and whatnot of trading, but if you're not getting anywhere with doing that, you need to figure out like your problem, you know? And this is one way you can work on your strategy to improve your strategy, optimize it, and this can actually help with your psychology in your trading because it'll shift the way you view trading from a gambling mindset to a statistical mindset. But also it will shift it so that you have a better strategy. You're able to actually handle more drawdown, or you'll have less drawdown, even making the same amount of emotional mistakes, right? Because let's say you have a very great trading system. Like someone, let's say, has a 90% win rate at 1-to-1 trading system. Even they can afford to make more emotional mistakes and still be green. Because if they're still taking their setups, but maybe taking some few random trades there and here and there, they'll still come out very green. So definitely important for sure to look into that, you know. All right, so since this is not working because the C column is iffy here, this might be locked, so we won't be able to work on that, unfortunately. Even though it was working fine here. I think I know why. Do we have some invalid data here? This one, does this make a difference? Shouldn't make a difference. No, it doesn't. Do you have anything invalid written in this column? That shouldn't matter though. No, we don't. Okay. This is going to be something for ChatGPT. Oh, maybe there's trailing. Oh. Guys, I found the problem. There's a trailing space. Wow. That is crazy. Man, Excel probably should not have that implemented. Alright, oh well. There was a trailing space in the numbers. So literally we just have to add a space, or in the string. So we have to just literally add a space after each one. That's a bummer. So this would just be outside, but we have to add a space in the quotations. So it'd be outside, add a space. Outside, add a space. Why is it 0%? Oh, spelled it wrong. There we go. And it matches my data perfectly that I calculated previously. All right, so we have filtering based on entry models. So for example, if you're someone that wants to just stick to one entry model, you can now use your data here and find the one with the best EV, right? Since risk reward means nothing by itself, average win rate means nothing by itself, you want to look at the EVs. So whichever one is the greatest here, you pick that one. So in this case, you can, let's say, since it's this one, you can highlight this. So 2.9 is the greatest here. So now the only problem here I have is Impulse. I only took 11 trade sample size here. The sample size is too small here for Impulse model from a live trades because I don't take many Impulse model setups. So the sample size is too small to be significant. This 80% over a long period of time is probably not 80%. It's probably going to be 70% at 3.8 or 60 or 50 or even 40, which is still profitable, but it's not going to be a 2.9. So we're going to cross that out and we'll go with something with a bigger sample size here. So IFG, I have a sample size of 94 trades, which is pretty solid. OB has 275. That's my main setup I take. Stop 100 is about 84, which is solid as well. So let's look at the other three. In terms of the other three, OB still wins. And I'm not surprised. I've done backtesting this already, so I already know my data, but I'm just doing this video here to show you guys the data and how you can do it yourself. So, but anyway, we'll highlight this because it's the biggest right now, but putting in sample size is something you need to consider. So the sample size is too small. So impulse model would not be your ideal actual thing. Sample size too small. Ideally, you'd be trading my OB entry model. 2.5 risk reward, 2.5 EV, 4.8 risk reward, 60% win rate. That's excellent right there. These are the confluences, which I already mentioned. And we can delete this. Now let's say you want to filter through other things. So let's pull up my something here real quick. Where is this, bro? Pulling up something inside the course PDF real quick, y'all. I'm looking through it. There's a checklist I have somewhere. I need to look for it. Okay. So we can also look at whether, for example, you can also look at whether or not price had an SMT divergence. That's also another thing. You can filter in journal. I don't have that in my journal here, so I'd have to manually go through, add that data or add that column here, rating, and go through that. Another thing is you can journal how price delivered to your POI. That's something I also look at. And I think I deleted that column because I used to have it here. Yeah, it got deleted. Okay. And over time, once you get like a ton of data, let's say you have 1,000 data sample size, you can like just stop journaling certain things. Like for example, you don't have to journal external and internal trend win rates anymore if you already know the difference between the two. Like for example here, I already know the difference that there's about an 8% difference, 8% win rate difference between me taking pro trend versus counter trend external, versus there's a bigger difference in terms of win rate when I take a pro trend internal versus pro trend or counter trend internal. There's almost a 20% win rate difference. This is huge, right? It's a huge difference here. But the external trend is still 8% difference. So let's say you want to filter things out that are statistically significant. So what you can do here is we'll do something like this. Anything that's statistically significant, it will be green. So this would be significant to me. 8%, 8 to 10% win rate is a big difference in EV. If you want to use a calculator on my website, you can check that out yourself with your own strategy. This is also significantly different or statistically significant. It's almost a 20% win rate difference here. So let's say you're trying to filter your trades and you say, in the future, based on my journaling, I only want to take trades when the internal trend is in my direction. In that case, you can just have a much higher win rate by just optimizing here. This is how you optimize. Now, will you miss some trades? Yes, you will miss some trades. It's hard to optimize. It's basically going to be impossible for you to optimize your trades. Never expect to not reduce your trade count. That's just how trading is. Some people just psychologically can't handle a lower win rate. Hence why it's actually wiser for those people to actually take less trades. Not just take less trades, but take less trades in terms of less low win rate setups, more high win rate setups. Now this here, inside and outside kill zone, it's not a huge statistical difference here. If we want to go very specific, it's basically, yeah, it's only 2% difference here. So I wouldn't say this is statistically significant. Again, statistically significant should be something that is around 10% difference in win rate, roughly. Or risk reward wise, you can just calculate on my website, but we'll just focus on win rate today. So to me, like I said, looking at this data here, what does this tell me? This tells me in my trading that when I take trades inside the kill zone, my risk reward will be slightly higher. So let's do the math here. 4.9 is my average. So my risk reward average is about 7% higher, which is not a huge difference. So that's not going to be too much of a difference. But my win rate is 6% higher inside my kill zones. So some people may think kill zone increases your win rate by like 20, 30%. That is just complete BS and cap. Unless you have the data to prove that, that is complete BS. Because time in the market, or the time that you trade in the market, is not going to improve your win rate by that much unless you're trading like pre-market. That's a different story, because that's before 9:30, you know, when the algorithm basically activates and everyone starts trading. Whether you want to call it the algorithm or not, you know, the market has increased volatility at 9:30 because it's open. It's the New York Stock Exchange open. You should know that anyway as a trader, right? That's not even debatable. So here is the data here. These are statistical points you would look at in your trading. You would say, I only want to take external pro trend trades. I only want to take internal pro trend trades. You can improve your overall win rate by just filtering everything out that is counter. And then you can filter out based on an entry model. Use the one that gives you the best EV. In this case, sample size is too small for Impulse, so I would go with the next one, which is good sample size of OB entry model. So if you do external trend pro with the way I structure my strategy on my course, and internal trend pro, plus you only trade the OB entry model, you're going to come out with amazing stats, man. You're going to come out with amazing stats. Stats that nobody will believe and people will never see because they've never done the work themselves in terms of looking through the journal. A lot of people are lazy in trading. That's also part of the reason why they fail. Also, the other part is psychology and strategy. But another part is, or a key component that in general is just from all of them, or most of them that fail, is discipline, effort, and just the amount of willingness they're willing to put into their trading. That's just the truth. So let's see how often this thing is playing. It's about an hour here. We have 5 people watching. And then now we can go over some other things you can basically optimize. So for example, let's optimize set rating before taking a trade. So this is basically something you can say could be discretionary. You can also mechanicalize this with a checklist, which I have a checklist. But for example, you want to see a win rate difference between an A setup versus B setup. So we'll name it that. And this is not a well, technically it is. It's an overall confluence. So if you just want to do this is simple. We can just copy these formulas here, and then we can just change it to V, which is a column. If you guys know an easier way to do this, let me know, because I feel like the way I'm doing it is not the most efficient way of doing this. It's just what I can think of on top of my head right now. So you just do A here, and then keep everything else the same. And you do B here. So surprisingly here, my B setups have a higher risk reward average of a 5.7. Now here's the one problem with this, which is not good right now. I've only journaled and kept track of setup rating before taking trade only a few times. So you can see a majority of trades that did not journal this column. Therefore, this is not statistically, this statistically means nothing here. So this basically doesn't mean anything. Now, if we want to count, we can count how many. So we just want to count from journal V to V, and then if we just count number of A. So I've journaled 26 A setups, and see the number of B setups. So 26, 22, about 48, which is almost, I guess it's almost 100 or halfway, right? Preferably still want more data there, but about 50 trades, 48 of them that have done this rating here, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 19, 20, 21. Yeah, 48 makes rough sense here. Oh, I have it right here. Boom. That's the count formula right there. And again, if you want access to this journal without having to do all this manual work yourself and just want to go straight into it, check out the WAP. On my WAP, I have access to the trading journal. It includes the $90 you're paying is not only just for a trading journal template, but also literally so that you can see and study my past trades I've taken, right? Which is the main part, I'd say, of the trading journal. You'll see, and also not only do you get all this data, but you actually have a link. So for example, here's a link here to one of my trades. So this would be one of the trades right here. Right? I have a screenshot of all the trades I've taken. Every single one. Live in the journal here. With entry screenshots for all the trades. So for $97, you're getting a ton of value. So it's not just your typical trading journal. It's not your typical normal trader's trading journal. Now let's go over win rate here. So I believe this is V, which was the column, and we had to change this obviously to A. All we can do here is to make it simpler for ourselves. Copy this. Copy this. Should be good. 100%. Wait. Am I doing this right? A, W, L. Okay, I guess it is right. So from the trades I've journaled so far, it's 100% win rate for a setup that's rated A. Let me see if that is right here. Again, I did not journal all the trades and rate them, so obviously that's not going to be the case. No one's going to have a 100% win rate. Let's see, because I don't remember the exact way I journaled or did these ratings and chose these ratings. There's a loss with a B setup. There might have not been a loss with an A setup that I've journaled. See, that's a break even. Is that a loss? That's a win. Okay. All right. So we won't focus too much on this just because, again, unless I journaled or collected a lot of data and basically filled out all these for all these trades, which is kind of too late now. I mean, I kind of can using my mechanical A plus versus B setup checklist. I could just do that. It'll take a while. I'm probably not going to do that on stream because it'll take way too long. That'd be very boring to watch. But once I fill that out, this 1% here will change. So it's not going to be 100%. Now let's go to B here because I don't want people thinking I have a 100% win rate because that's 100% not the case. Very transparent about my win rate. It's about a 60 to 65%. My risk score is about 3 to 4. So for the B setups, it's about a 50% win rate. And matter of fact, if you want, I was thinking we can also include a sample size here. So we can include the number of trades taken that have these confluences. So we can also include the sample size here. But that's not something we should really care too much focus on. We kind of basically what we kind of just want to include the confluences where we do have enough sample size. But I'm also doing this as an example. Otherwise, I would not have A plus and B set up here as a confluence here journaled. I'd basically still collect enough data here and then put these in here. So it's not statistically significant here because not enough data. Now let's see. What else can we journal or optimize here from what I've so far kept track? So honestly, if I say my anticipation draw liquidity is wrong, it's going to be a loss. If I'm not mistaken here. Let's see. No, it's a win. Okay, so this is something you can also optimize and look through. You can test your discretion, which a lot of people don't test, but I think you should, because some people think their discretion or intuition is intuition, when in reality it could just be gambling and straight emotions, and it's not intuition, right? I like to keep things objective and mechanical as much as possible in my trading, hence why I have a checklist for things to rate ratings, setups. But drawing liquidity, for example, I still have a mechanical checklist for this, and we can check the win rate difference between whether my drawing liquidity was right. Basically, we are kind of saying that if my drawing liquidity is actually correct, I should be winning more trades. So this is actually something you don't really want to be looking at, because it doesn't matter here. It won't have changed or affect the way you trade. But things like this, for example, maybe you only have a few confluences versus a lot of confluences, which is an A+ setup. This would obviously affect your win rate. Now we can optimize also. You can optimize break-even systems, right? I've done this already from back testing over a ton of data, so I don't have to do it again. But that's something you can also optimize. Major stop loss drawdown. This is the thing where I was talking about where I can double my risk reward. I can have a 9 risk reward at 60% win rate, but I would miss around 40 to 60% of my trades if I reduce my entry model or entry price by 2. Or divide by 2. Let's see. This is just something I was just keeping track in terms of price delivery. How much risk reward did it deliver? I have it calculated right here as a median. We don't really want to use mean here, just because there's some that go crazy, like 18 risk reward, 13, 23 risk reward. This is basically keeping track of optimizing my targets, 30 risk reward, to see like how I can better improve my TPs and my trading to get the most out of my trades. 28 risk reward. You can see there's definitely outliers in the data set, hence why I used the median formula here for how much risk reward did it run. But that's something you guys can also look into. But looking at this number and knowing about it is not going to change too much, since you're like, okay, if I ran more, that just means that I need to target in general in my trading. I need to hold my trades for longer in terms of my targets. So I need to set my TPs slightly further than what I usually TP at. Now, the only problem with this is you need to find a way to mechanically figure this out, right? So that's something that would be more important than just this pure number. But this pure number here tells me my risk reward average is 3.6 here after 600-ish trades. And the median with how much I actually ran for each trade is 9 risk reward. So I'm basically telling myself from my data that I'm missing out still on the risk reward. Even though the fact I'm catching 3.6 risk reward, which is pretty solid per trade, I'm still missing out on like a third or 2/3 of my trades, my winning trades that run for a 9 average. And this is the reason why you may think this is so high, but it makes sense. And the reason why is because of my entries. My entries are extremely precise. My stop loss is very small. So it's very easy for me to get a 3.6 risk reward secured average. And hence why 9.0 is not anything crazy for my strategy. Now, someone that's trading with a very wide stop loss, of course, that is pretty crazy, right? Did I catch majority of the move? This is also another thing I was looking into, right? You can clearly see here, I was only able to catch 55% of the move, majority of the move, which I consider, I use a mechanical definition of at least 75% before break even. So you can see I'm on 45% of my trades, I'm not catching majority and I'm missing out. And the 9 risk reward is basically the average that I'm missing out on. So I need to work on my targets, having further targets, find ways to mechanically define when to use those further targets versus when to not change them and keep them where they are. But I cannot expect to get this number to 100%, 90%, or 80%. I think 70%, being able to catch majority of the move 70% times means you're literally bottom ticking and top ticking the market. That's literally what it means, to catch majority of the move a lot of times. So 55% is actually not that bad. It's not that bad. That means I'm able to basically bottom tick and top tick the market 55% of the times on my trades in terms of my entry and exit. So it's not too bad. Ideally, I want to get this number at some point to 70% if I can, but that obviously will take time. But this is not a concern right now because this system's already consistently profitable. It's extremely profitable already. Here's the win rate, 65% at 3.6 overall, including all my entry models. You can see the win rate here, right? Account gain is 1,003%. This is about 9 months, I believe, of data here. 172 losses, 139 break evens. So roughly the same amount of break evens as losses, but the win is like double 2 to 3 times. 111 trading days, an EV of 2.0, which means I'm making basically 2 times the amount I'm risking per trade on average. And the average risk reward is 3.6, win rate 65%, and total number of trades is 637. So almost 1,000 trades maintaining these stats. So that's something you want to be looking at in your trading journal. Of course, you want to be taking each and every single trade as a journal screenshot. Again, if you're not doing this and you're not profitable, you're wasting your time. You have to be doing this if you're not profitable. You have to be journaling your trades if you're not profitable. Because if you're not profitable, there's a reason why. It means you're not putting enough effort, right? You can probably imagine the amount of effort I spent journaling all these live trades I took. This is a year. Almost a year. So something you guys want to consider, if you really want to take trading seriously, you need to treat it like a job. You need to treat it like a 9 to 5 where you're still putting time off the charts to work on this craft. So here's just a pure, proof of concept. The next thing you can also journal is also session and pairs, right? I already have that data here. So my win rate in New York session, a lot of people may think New York session is the most profitable. It's not necessarily true. My win rate for New York session is basically the same as my Asia session win rate. That may shock a lot of people because logically people would think, no, New York session should be the best. But I'm going based on my data here. It's showing it's not. Now, granted, London session I only have 124 trades. So if I took 300 trades in London session as well, 308, it might be lower than 75%. It might be higher. Who knows? But that's something you also want to keep in mind. So here's also a rule-based journal I highly recommend you guys to have, like a rule calendar. This is something you also get when you buy the private trading journal. This is where you can basically keep yourself disciplined. Have a discipline rate. If you're following your rules that entire day, make it green. If you didn't, make it red, and you'll see there's a correlation between discipline and your P&L. But nonetheless, aside from that, if we want, we can also add a few more columns here to look for more things to optimize. So we can look through that later in the stream. But in terms of win rate for sessions, we already have that data here. But I'll move it to optimization just in case. Just in case people are wondering how to do it, we'll do that real quick here. But we basically have all these columns here put in one place here, right here. If I'm mistaken, let's see, what are we missing? We have the kill zones, we have the trend confluences, we don't have kill zones. We can keep track of PY types, flips, origins, liquidity sweeps, inducement. I already have the data here, so this is another thing you can look at when in terms of optimizing. Maybe you say, I only want to take trades with the highest. So I only want to take trades off flips, which has 74% win rate. Now, what does this sacrifice or entail? That means if you only take this, you optimize your win rate, but you're missing out on 19 inducement trades, a 62% win rate. You're missing out on 131 origin trades at a 69% win rate, which is quite close. And you're missing out on 64% win rate of liquidity sweep metrics. And because I'm trading a positive risk reward system, overall you're missing out on net risk reward returns. You're sacrificing better stats for less net returns in terms of risk reward. So to me, it's not worth it. To me, it's still better to trade all these, right? Because with the 19 trades with the 62% win rate at 3.6 average, I'm still making money here. It's not red. Now, if it's red, if it's something that's not making me money, of course, you want to get rid of those, right? You want to get rid of those metrics or confluences that are going against me. But anything that is pro in my favor, basically anything above 33% win rate with a 3.6 is whatever EV is above 0 for that risk reward of 3.6, that is actually helping my trading. Now, if it's only barely helping my trading in terms of only giving me like 1 to 2 to 5 risk reward across like a huge sample size, and yeah, completely get rid of it because it's basically a waste of time and you're actually not optimizing your time well when you're trading. So you want to be doing all sorts of different optimization when it comes to trading. But yeah, here is, today, if you guys just joined the server, check out the Discord. The bot is spamming the chat here. with the links. I'm gonna have to, I'll change the settings on the bot so it doesn't do that here. But yeah, if you guys just join, make sure to join the free Discord server and also join the course. There's only 2 spots left in the course at the current price, because after today or after 2 spots are gone, it's gonna be double in price essentially. It'll be like $5.99 or $6.99. So if you want to get in now or learn knowledge of my strategy to get these kind of results, I recommend you join the course today while you still can, while there's still 2 spots left. So there it is. And yeah, we can also, journal more things here. Since we have this data here, we'll just put it all together in optimization here at this point, might as well. So we can have, where is it? Oh, another thing you can also do is combine confluences. So for example, let's say you want the most optimal trading strategy. People may not believe this, but you can get a win rate of 70 to 80% at Forest Ward. 80% win rate at Forest Ward is possible if you are very selective on your trades. And what does that mean? That means you are optimizing to a full extent and picking the most optimal strategy, all combinations. So for example, maybe you choose basically, you combine everything that's statistically significant. So this is too small sample size, so I wouldn't pick this. I'd pick this here. But basically, you want to do combinations and figure out which combinations give you the best expected value. So for example, you use an OB intra model only with external trend pro and internal trend also pro, and you also do inside kill zone only, and you take only 80+ setups. The 80% win rate at Forest Ward is definitely possible. You're probably not going to be taking many trades, right? It could just be maybe like 5 trades a month. So that's also something you need to consider. Is that something you're patient enough, you're fine with? It's better than ending green or ending red, that's for sure, right? If you're unprofitable, taking only 5 trades a month but ending green with those kind of stats is much better than you spending 3 to 4 hours on a chart every single day and not getting anywhere. It's much better, right? Your input is low, your output is extremely high. But for people like me, where I'm actively trading every single day, I still want something where I have a solid trade frequency, so I'm not bored in a sense, right? Trading is boring, but I don't want to just sit here and end up watching the entire chart just to take 5 trades in a single month, because my net risk reward, even at 80% win rate for risk reward, is, if you just do the math here, 5 trades, that's 20 and then -1, so that's like 19 risk reward, and it's not worth. I can make 100 risk reward in a month if I just trade everything, hence why that's what I do. It's more input, but it's not like I have anything else to do with my free time, right? So might as well. So let's say you want to take sessions. So we'll do New York session here. We'll do a London session. And later I'll tell ChatGPT to revise this to make it cleaner so we can get like a better setup here going on. This is just a rough outline to start out with. But this is exactly how you optimize your trading. A lot of people don't talk about this because they don't know how to optimize your trading. They don't understand whenever I say optimize your trading strategy, what it means and what it entails. This is what it entails. So New York session, literally we just use these formulas we already made earlier. It saves us a ton of time. And all we have to do here is just go to D. So column D. And I can also use name ranges here. It'd probably save us a lot more time, but it's too late, so it's fine. We'll keep these. It's in New York. It should be just NY. Yes, it is. I'm just checking for no spaces here. Perfect. So this is NY. Asia session. This would just be Asia. London session, this would just be London. There we go. So those are the risk reward averages from New York session, Asia session, and London session. You can see New York session is slightly higher, but London session is still the most. Now, again, just keep in mind, London session has 1/3 of the data as New York session. New York session has the most data, so it's going to be the most accurate. But again, it's something you want to be looking at. Now, if you look at the win rate percent, we could do that as well here. So I'm gonna just drag this one down here. And make it D, New York. See, a lot of people, I just know a lot of people, they don't have what it takes to become a profit trader. It's also why like 9% fail. Part of the reason is because no proper education. There's no barrier to entry for trading. You can basically trade and open a broker account and start trading and put in as much money as you want with no limit, without any type of expertise prior or any exam passed or certificate. So obviously that's one reason. The other reason is just because people are not willing to put in the work and do all this. They think this is too much. They think journaling is way too much effort, way too much work, but they don't realize this is only going to help them and not worsen things, right? If I'm telling you you can put in effort and actually improve your trading, why would you not do that, right? The only reason is because laziness or lack of time. Now, if you're lack of time, maybe you need to make some sacrifices. There's certain things you can sacrifice, obviously, and certain things you cannot sacrifice. So that's something on you to figure out. But yeah, so let's get to this, man. We're here to get to the bread, okay? We are here to get to the bread, and this is what it takes. I'm just showing you guys my thought process and how I was able to optimize my strategy into the stats here, because a lot of people don't believe my stats are real. And, this shows not only proof, but also this is how you can get similar stats of mine, right? You can do this with your own trading strategy. It doesn't have to be my strategy, but I would highly recommend you learn my strategy because I've done all the dirty work for you. So it saves you a lot of time, and you won't take as long to hit profitability as if you had to do all this yourself. I feel like a lot of traders, people with like mediocre trading stats, you won't be seeing them do all this optimization here. It's because, number one, they may not even know how to optimize, or they don't know statistics. Maybe they're just gambling. Or number two, they just don't feel like it. They're like, you know what? I'll just trade with whatever at. Maybe let's say you're at 60% win rate at 1-to-1. I'm comfortable with 60% at 1-to-1 and just stopping there and willing to just accept that. You can accept that if you like. That's completely up to you, I'm not in a position to tell you to have to optimize and try to improve or try to continuously improve, but honestly, I made a video talking about the learning curve and improvement. There's only so much you can learn and optimize, but you want to at least do like the basic foundational optimization, right? At least know your data before you start trading. If you're trading with no data backing what you're doing, to me, that's just called gambling, because there's no proof that what you're trading works. And then we'll change this to Asia. Change Asia. So Asia win rate, what? Okay, so the calculation here is wrong. Asia win rate is not 100%. There's something I'm definitely missing here. Let's see. Because Asia win rate here is 65%. It did get near session one correct. That's so weird. Huh. Winner divided by counting number of losers in Asia plus number of winners in Asia. Yeah, this should just be. It should just be. Not sure why it says 100%. It's very weird. All right, we'll skip that. Come back to it later, see if we can find a fix. But go to London session here. That is very strange. Very strange. So London's 75%, which is correct. Asia has a glitch here. I need to figure out here, because it's not supposed to be 100%. Every other session works here, so something is up here. Gonna try to copy this formula again, but it literally should not change. Was there maybe some that, let's see. Yeah, no clue. No clue why that is. All right, since we have no clue why that is, because I already see there's a loss here in Asia on this trade here. It should be counted as a loss. All right, we'll try one more time. It shouldn't also be case sensitive, so let's see. 49. Okay, that means the issue here would have to be the winners here. Oh, never mind. Now it's fixed. All right. Anyway, I don't know what happened there. It's working now. It's all that matters. So in this case, I can actually argue London session is the most profitable here for me. Now, if you want to just pick these out and categorize them, you could just say, all right, just pick whichever one has the highest and color it green. You can write a formula for that as well, I believe, in Excel. But yeah, so now that we have sessions, we can also optimize. Now, for me, buy and sell is not really optimization. First off, from my data here, it's only a 3% significant difference or win rate difference, which is like no difference basically. So to me, it doesn't actually mean anything. So it's not something you really want to care about. Now, because if you think about it this way, let's say your win rate with selling is 50%. I wouldn't suggest cutting out selling in total, because context is what matters here, not that the buy or sell specifically is what matters. Because if you have a positive risk reward, let's say 2 risk reward even, 50% win rate at 2 risk reward, you're still making positive net risk reward returns. So why would you not take those trades, So I wouldn't look at buy and sell here. It doesn't actually mean anything. Unless your data somehow is like crazy where your sell is meaning your shorts. Buy means long, by the way, for those that are confused. For example, if your data for some reason, your EV of selling comes out negative, then yeah, for sure, cut selling or shorting out. But it shouldn't be that anyway. Because there's going to be pro trend buying, there's also going to be pro trend selling in different market conditions and different assets. Therefore, this is not something you want to really care about. Now, what else we can look at is inducement, flips, origins, liquidity sweep. So that's another thing we can look at. So if we go to inducement, flips, origins, liquidity sweeps. All right, and then we can just go through journal here. I don't have all these marked out, so I stopped kind of journaling the PY, as you can see here, but previously I've journaled each one, except for the algo trades here. This is from a long time ago. It's not the same algo I'm working on now. This is from in the past, but flip, inducement, flip, origin, liquidity sweep. Yeah, so we can just use column F for that. So we can look at the average risk reward basically here. And then for text here, we can just, to make it easier and save us a lot of time, we can just reference this. There we go. Now all we do is drag it down and flips. Wait. F, A21, A22. Wait, it should work. Flips is a, oh. Gotta spell it correctly. There we go. So that's the average risk reward for trading off inducement, flips, origin, and liquidity sweeps. So inducement, the risk reward, pretty surprising. The risk reward on inducement trades is actually higher than flips. So again, logic will not always work in the market in terms of you may think something, but it might not actually be in your data true. So in this case, inducement actually gave a slight average higher risk reward. Now origin makes sense. Origin has the highest risk reward average, but I was really anticipating that liquidity sweeps would be the highest risk reward average because you have a much bigger range. But part of this reason can also not be entirely dependent on the PY. It could be dependent on your TP, right? So let's say you just had a bad TP this day or a few days or over the long run whenever you're taking liquidity sweeps setups. So if your TP is not that far, even if you have a big range, your risk reward is going to be lower. But we'll go with origin here as a winner here. And if we check the number of trades here, so inducement, see, here we go. Look at the statistical sample size here. Inducement, only 19 trades taken. So very small sample size. Basically means nothing. Okay. Flips, origins, liquidity sweep all have roughly the same. So these are a lot more reliable. So inducement here is too low sample size. So I would not care about inducement here. I'll look at these three basically, and for the most part, they make the most sense in a sense. So now win rate, we'll go with win rate here. So if we just do, just drag this down here, and this is column F, and then we can just convert this to just reference this cell, so it's easier. We change this to column F and then convert all this to this cell here. 821, convert these to F, and then 821. The reason why we do this also is so you understand your data and statistics without having to do too much heavy work and calculating yourself. Because once you have this set up, guys, and this will be included with the Pride Trading Journal, by the way, so you should be able to see all this once you get the WAP and you pay for $97. But you have this set up for you ahead of time, so that basically all you have to worry about is just inputting your trades in the journal, like line by line here, row by row. That's all you have to worry about, and all these calculations will be updating like in live time. Like for example, let's say okay, look at the risk reward for it. This might not be statistically significant enough to change the risk reward here, but look at the risk reward average for New York session. It's 3.59 right now. Let's say I put like something crazy 200 right now in the New York session. You can see it went from 3.59 to 4.88. Do something like 20, it probably won't make a huge difference. So you get 3.7. Let's put it back to normal. Now it's back to normal at 3.59. So you see all these numbers are continuously updating every time you put in new data. And that's what we want and we're looking for. So now let's see, in terms of win rate, anything significant standing out to us. Inducement being the lowest win rate is very expected, not surprised at all. That's understandable. Liquidity sweep being the second lowest, this can be understandable to an extent, because if you're taking counter trend liquidity sweeps, you will have a low win rate. So you want to take pro trend liquidity sweep setups, not counter trend. Again, something I talk about within the advanced course. If you don't know how to distinguish between good liquidity sweeps versus bad liquidity sweeps, check that out. Now, origin and flip being quite similar. The reason why I think flip is also higher here is because you take, because flips in continuations whenever the market is trending, for those that don't know from a trading experience, price tends to go back to flips a lot more often than fully going back to an origin. So that does make sense why flips win rate is actually slightly higher here, because if price is trending heavy and it does go back to an origin, it's going to be a little less likely that it holds origin, because if it goes back to origin, that means it failed at the flip. If it failed at the flip, that means there's a higher chance price could actually be pumping or going through that structure. So it makes sense here why flip is the best win rate here at 74%. So you do need to incorporate context into your statistics too, and understand what each number and value means. So what we can do here is, for these confluences, we can actually break these groups down. What do I mean by that? Well, I'll show you guys here. We break it down to session and PY type. Okay, and then if you want, we can add an extra space above each one. These are just visual things. Again, you'll get access to all this and with all the formulas already pre-done for you once you get access to my private trading journal. So you don't have to worry about doing all this yourself, but here's an example. So here's session broken down, PY type breaking down, confluences broken down. Inside outside kill zone, it can be considered a confluence. PY types, right? And then you can just basically from here, you guys should be able to understand how to do it here from this point on, right? You just repeat the same process for any other type of data you're collecting. So far, we've collected all this. Buy and sell is not something you want to collect. It doesn't matter. So you can even delete this column if you want, honestly. It's not going to make any difference to your data. But if it's something you want to keep, I'll keep it here for people that want to keep that in their journal because they're using a journal template. Internal and external trend, you want to keep track of. Entry screenshot, for sure, you want to keep track of screenshots if you notice certain things happening over and over again. That could be keys. Oh, maybe I need to change this or update this and optimize this to make my strategy even better. Trade outcome, risk reward, that's just outputs. Did I capture the majority of the move? You can't really optimize on this in terms of like how you trade. How much risk reward did it run? That's just a number to recognize and understand. Was there a fake market reaction prior to maximizing risk reward? Also something you can look at. There is actually a column I'm going to add today in this video. And we will... Is it yes or no right now? Okay, it is for now. Yes or no. That's fine. We can keep it yes or no. This is going to be for people that scalp. So this will help you that are scalping to keep track of this. Did price hit 1-to-1? Basically, this will help you determine whether you want to be scalping or you want to trade my main setup going for the high risk reward, right? So what you do essentially is you go through all the trades you take in the past, preferably if you have data of that already, and then you go through each one and you open it up. For example, let's say I open this one up here. Okay, let's say I open this trade up here. All right, you guys see the trade, right? Did it go 1-to-1? Even if it goes 3-to-3, 4-to-4, 5 risk reward, I don't care. Did it go 1-to-1? Yes. So all I do here in my journal is I put yes. Okay. I just put yes, and then I keep track of this, basically yes or no ratio. I can just do this. Honestly, I just move it here. It might actually... There we go. And you can see if I change no, it's now 50%. So I even have formulas above here for a journal for those that just want to look at the formulas above here instead of having everything in one place. I would recommend if you're trying to optimize, try to have everything in one place like this. It's easier to tell and see everything instead of having to go back and forth like this. But I do know Notion also has some built-in formulas you can use as well. So if you use Notion, you can just, and it does the same thing that I'm doing, but probably potentially more efficient, you can do that as well. And let me see. Okay, so we can just go through each one. For example, let's say the point of going through this 1-to-1 thing is obviously if it's a loser, you still want to check losers. So losing trades, you still want to check if it goes 1-to-1. And the reason why is because for losing trades, it could be a loser because I set and forget that trade, but it doesn't mean it didn't go 1-to-1. So you want to check all the trades. We're going to skip the algo trades, right? Okay, we're going to skip all the algo trades because I don't use that anymore. It's not as good as my strategy that I mainly trade that I teach in the course. So there's no point in trading the algo. We'll go with, let's say you go with this trade here, for example. This went 1-to-1. This also went 1-to-1. So for example, in these two trades, rows 70 and 71, you can just highlight them if you want to see it clearer, more clear. Put yes. You just put yes for these. And then what you do at the end is you calculate the win rate for scalping. So literally this is what you do. So let's say you have, how do you guys want to call this? We can call it whatever column you want. Scalping 1-to-1, we'll call it... We'll call it scalping our win rate percent. You know the risk reward, so we don't need to calculate the risk reward. We just look at the win rate here. So you can call this extras if you want. So this is just some extra data for those that just want to, let's say, focus on scalping. And all you do here is obviously leave the risk reward blank. Matter of fact, we can just, we'll move back here. You can honestly write the formula wherever. So we take this, right? We just put it back here and we find the row, which is X here. So you go with X. And instead of A27, obviously you want to change it to yes. That makes sense. Let me think if that makes sense. Yes. Looks for the win rate. No, it does not. Okay, it should make sense. We'll check it real quick. We can fact check this quite easily. So you have yes here too. And then obviously you just want basically, wait, no, hold on. Wait, this is not how you want to do it, because if you put yes, that means it's a guaranteed win. So you don't want to divide those. You want to divide by the total number of trades taken. Okay, so we'll just have to divide by that number. So instead of these, we're gonna have to change it to, we wouldn't have a filter here. Trying to think. I think this is not the best way to calculate this for this specific column, because this specific column basically gives you the win rate, right? If it's no, no, no like this, that's your win rate right here, updating in live time right now. So actually all we need here is just this. This is count no and text of count yes, divided by yes, times 100. Seems like too much. Oh, because this has a ratio. Got it. That's why it's so much longer of a formula. So all you have to do here actually is just this. Count ifs. You look at the column X. Journal X to X. Go with yes. And then you just divide by count ifs. Journal X to X. Yes. Plus count ifs, journal no. Okay, that should be it there. So we're just dividing the number of yeses divided by total yes and no's combined. So if we do something like show up to 60%, yes it is. Let's say you add some yeses just to test this out real quick, just to make sure it works. 64% matches 64%. So there we go. That's the formula there for scalpers one-to-one win rate. So you basically just want to answer that column for all the trades taken, and then you can get the one-to-one. If you just target a one-to-one static risk or no break even, nothing. I wouldn't recommend people to even incorporate a break even if you're just targeting one-to-one, because like your break-even point is going to be so close to like your entry, or so close to where price is live before it hits one-to-one anyway. Just let it go. Unless you find it like very extremely beneficial. Me personally, I'd rather just keep it simple and just, keep it at one-to-one. So if my win rate right now, if I'm going to make an assumption here, since my win rate is around 65%, if I was to just target one-to-one, obviously it's going to be a much higher win rate. It'll probably be like 80, 85%, maybe 90% win rate. I'll have to honestly look through this and basically answer this, because again, you want to look at the losing trades too, because there's losing trades. What is this here? There's losing trades here that actually go one-to-one, and actually if you're scalping, it would be a winner. Like these one, that might be 1-to-1, 2, 3, 4, 5, 6. Like all these, this would be 6 risk reward here if you're just going 1-to-1. Right? Just scalping. It would be 6 winners. Now in this case, it was 4, 5, 9, 8, 7. So you would be basically making the same expected value here, or expected outcome here, if you're just scalping. So sometimes it is going to be like that. You know, scalping, you're going to have a higher win rate that's expected. And if you, again, psychologically can't handle lower win rate, go with scalping, man. No reason to try to force something that you're not good at or can't do. Not that you can't do, but yeah, psychologically you just can't do. So this is another thing you can look into. If we want to look at what I pre-existing have without spending too much time on stream today, we can also look at, let's see, what else could you look through? I don't think you can really do much with this here. Break even trade management, you can basically, I already have this filtered here, so you don't even need to put it in the optimization section, but basically it just counts the number of trades that actually go to break even. So about 70% or 69% of my trades hit break even. Not hit break even, they are good break evens. So about 69% are good break evens. The other 31% are actually bad break evens, meaning the price later actually hits my break even and then goes to TP. So that's what those mean. I'm just making sure the bot is not spamming here. And then breaking system, you can also try that out and check it out as well. But yeah, this is basically how you optimize. And of course, you can add a few other things from the course that I teach. You can optimize those, like internal sweeps. You can optimize into liquidity sweeps plus tap into POI versus just liquidity sweep. You can look into data for, and obviously, internal change of character, which we already covered. There's also clear draw on liquidity, data wicks. There's a lot of things you can really look into. So, but for the most part, this is basically how you optimize and look through everything. Now, if you want to figure out a right way to make this more smoother here, or more clean visually, so for example, if you want to, I'm just thinking of a way to best do this. If you want to combine your results, so let's say you want to filter where you want to say, I want to see the expected value of taking only OB entry models with only external trend and only internal trend pro and only in none session and only off flips. You can filter that. This will probably be a very long equation here. So I'd have to think of what the equation would be here. It'd probably just be a huge... It'll be a huge... So basically you're going to have to find the average risk reward and then that win rate. And then you get the EV from there. So if you want to make a new column, you can. So we can make it something called... These are just comments. And then if you want to name this your combination or new optimized model. So this combination of filters, then you would basically have your new average win rate and risk reward here. Is there a way to make this visually so I can split this apart here? Nope, that's not it. Trying to find a solid color that looks all right here. We'll use orange for now, just as a visual difference. So let's say you want to then basically get the average risk reward. So this is your optimized model. Let's say you want to optimize by saying OB entry model plus, you only want to do external pro trend plus external or internal trend pro trend. I've actually never done this specifically, this one right here. So we'll see what it looks like. I don't want to make too many filters, so probably overfit the data here, potentially. Oh, one more thing I forgot to do. So I forgot to put the EV calculations here for the ones below here. So we can do that as well, because I forgot you don't just want to focus on the win rate here. You also want to look at the average risk reward of the choices you pick. Like for example, lens session analysis here actually outbeats both win rate and risk reward. In this case here, 74% win rate at flips beats 69% win rate at origins, but the risk reward being lower on average when you take it from the flip might actually affect this. Now, this is where training data does get a little complicated, because what if you're taking majority OB entry models at the flips? And what if majority times at the origins you're taking IFGs? That would be too much data. That's probably going to take too long to look into in terms of data, unless you guys can think of a solution for that. I can't think of one or any on top of my head right now. Let me make my camera smaller. I should notice it's blocking something. So because it might potentially overcomplicate this, we would try not to do that. So we'll just go off this for now. So we got the EV, we just drag this formula here, right? We just drag it down here. We don't need it for the scalping one-to-one. Actually, you can if you want to get the average reward. You already know the average reward. So the other extra spaces, we just delete these. Okay, so we should have the EV value for all these now. And if you want to just highlight only the EV value column, we can do that as well. And then the extras here, your average reward, you just put 1 here, because obviously it's just one-to-one risk reward. And if you want to simplify things, you can just have it only at 1 decimal place. Probably easier to read instead of 2. It's not affecting the EV column, separate. We'll just have it at 2 for now. Actually, we'll keep it at, I'll bring it back to 2 if it later find it for some reason it's different, but basically 0.0 whatever. So 0.0x, whatever should not really have much of a difference. It won't basically affect your decision. That's what I'm trying to say. I'm just making sure, I'm not entirely sure how Excel rounds or Google Spreadsheet rounds here, but it seems like it's using a typical 5-up rounding. So it's not bad. Okay, we'll use this. And then we pick whichever one has the highest EV here. You can do where is it? There is a function that you can do that just highlights the biggest value. Nope, not paint format. It highlights the biggest or greatest expected value for you if you ever need to change some things. Format, no. Wrapping, no. Alignment, no. Conditional formatting, this is where it is. So let's see, is there one that gives you the ability to just select the biggest? Greater than or equal to. What would be custom? What would be the greatest formula here? Let me look this up real quick. Okay, while I look that up, that's basically what we're going to do. You just use conditional formatting for the most part. Oh, right. Why did I not think of that? Obviously. Wait, no, this would just be Yeah, no, this should work, right? Can I just do max here? Nope, it's not doing anything. Okay, I'd have to. Why isn't it highlighting that? Let's see if it works here. Okay, that's not the max. I want it to only highlight the max here. It's not highlighting only the max. Let's do 831. Nope. It should just highlight the max here. Not all of them. Okay, let's see. Oh, wait, no, never mind. No, that's not it. Well, I looked that up. This is basically how you do it, and then for you guys can probably figure out how to combine the filters. It shouldn't be too hard. You probably ChatGPT and try to figure that out. I'm gonna see if this works here. Oh wow, it does. Wait, why is it only how? Why do I have to do that to do that? D9 and it equals D9 Interesting. I think it doesn't matter if I use D9 or not. Oh no, it does. It starts with D9, so I have to use D9. Not sure why. Not sure what the logic is there. Oh, it's referencing. Gotcha. So it's referencing D9. It needs the initial reference point. Okay, so that'll be basically what you apply here. And then you can apply the same formula for here. I know it's obviously not the right number here because sample size, but we'll just apply this default. And then we'll clear this here. Yeah, see, even if you reset it, it hides it because it's conditional formatting. There you go. And we have another conditional formatting. We'll do D19 equals max D19 or D21. There's that one, and then we have these. The last one, obviously, you don't need to pick from. That's just one data point. This be D24 or equals D24 equals max D24 to D27. Why did I highlight two? Oh, it's because I had one. Let me reset. Whoa, no. Highlighting two of them. Let's check this out. Let's see. Should only highlight one. That was the only rule there too. Okay. Let's try it again. D24 was max. D24 to D27. It does highlight 2 of them. Why would 2.41 be highlighted? That's weird. Unless the calculations here are wrong. No, it should be right. 5.0 is 9%. Obviously, is higher. But yeah, you guys can see how you can't just look at win rate, right? Look at the average risk reward. The average risk reward of Origin is higher. Therefore, you actually come out slightly better with trading this Origins here. Like, liquidity sweeps actually performed the worst. So this just means I likely took some lower probability liquidity sweeps. So counter trend liquidity sweeps are the ones you actually don't want to be taking. You don't want to be taking those for the most part. I think it's because it's checking too. Oh wow, it's still high in 2 of them. That is strange. Alright, I'm just gonna have to not. You guys are just gonna have to manually do this one. It might be a glitch. So this one, Origin is the best one. So that'll be what you pick. So if you want to optimize fully, you can try to combine these and see what your results are. So for example, your results here would be then move this EV. This is simple. I'm just going to copy and paste the formulas from here. Move it here. Delete these. Bro, I don't want to keep those. Okay. H2 I2. And then minus, obviously, your win rate again. So I2. Okay. And then we can get the average risk reward now. So if we combine these, if I'm trying to think the correct way to do this. Because I was thinking one way you could try to get a rough average is dividing the EVs. So you could just do 2.9 plus 4.7 plus 2.61 plus 0.14. But that's just getting the average between 4. It's not actually optimizing it properly. Okay, so to do this, we'll focus on average risk reward first. So for average risk reward first, we would actually, now that I'm thinking about it, we would just pick the one with the biggest risk reward here. So instead of going off of these specific ones, we could actually just go off the biggest risk reward here, which is so the highest risk reward here is the OB entry model. So we want to filter first based on OB entry model. So for example, okay, we'll do, you know what? We'll do conditional formatting for all of them. The B3, This is gonna be a pain in the butt to do. Oh, B equals. This one highlights 2 as well. It's not in the max. Alright, this thing is weird. I'm just gonna ignore that. If you guys know what the right formula is, let me know. I'm just gonna keep it like that. We'll just mainly highlight it for the time being, because these other ones were correct. 5.7. So confluences were skipped for now. London session has the highest R. And we'll test to see whether or not including all these optimizations improves. If it doesn't even improve the EV, then obviously there's no point in doing that, because you basically reduce your number of trades taken. So POI type, best POI type is origin for risk reward purposes. Best session is London session. Confluences. Do I want to include these? I'll include these. These are kind of separate categories personally, but we'll see. And also we have to see how many trades sample size is this new optimized model. If it's only like 1 or 2, then it means nothing. If it's like maybe at least 10 or 20, then it's all right. So I'm not gonna use A or B setup guys here, because obviously this is not 100% win rate with the A setup. I only journaled a few of these. So what we're gonna do with this is I'm going to change this formatting here to only go up to 14. Don't know why it's highlighting this now. It says 16 still. D9 equals max D9 to D14. Now it's just 14. But this is 15 here. Now it wants to delete that. Okay, that's weird. I didn't do that manually either. Alright, we'll just have to we'll just have to get rid of the formatting for now until I figure this out. So we'll delete the rule. And then for these two, we're just gonna, let's ignore these. Sample size too small for both of these. It's like only 50. And then go through them in order, so it's not accurate. So we'll ignore these two EVs. We'll look at these right here. The highest EV here is going to be this 3, which is very, very good EV. That's internal trend pro trades. And then the highest win rate here, ignoring these bottom ones, is 75%. We'll use this, and we'll use, yeah, we'll just use this for now. And we'll see how it goes. I don't want to add too much to this formula here. So it would be average ifs here, I believe, right? Average ifs. This end part's going to be the same. This beginning part's the same, but the middle part is going to be the big difference. So what we're going to have here is, this is the setup type. So we want to use the OB intramodel setup. And just to compare, this is correct. Yes, it is. And we'll convert this to just 1 decimal place to keep everything simple. I think having risk reward is just 1 decimal place is much easier to just look through. So we'll keep at that. And I'm going to turn down the brightness of the ring light because it does look really bright here. All right, there we go. So it should be less better now. It shouldn't be too bad. Okay, let's get back to work. Move the mic down just a little bit. So we have OB entry model, and then we also got, what else are we optimizing? We're optimizing internal trend counter. So we have to look at this here. What is this formula here? We have to include this. And if I do this wrong, I'll know if I'm doing this wrong at the end. I'm not extremely good at spreadsheet or Google spreadsheet. Let's test it out here. So average risk reward, including these two, is 6.5. Okay, now let's add London session here as a filter. So what it's doing here is oh, hold on. London session. It's a syntax error. Okay, so we. Okay, so you can see including London session actually brought down the risk reward a bit here. But we'll include that. We'll include that. I'm answering a DM real quick from a course member in the Discord. Give me 1 second, guys. We got Case joining the Discord. Welcome, Case. Don't have a lot of new people here today from the stream, but that's cool with me. Again, this is just to help you guys out for free. If you guys obviously want paid information and exclusive content on my strategy, okay, just have to answer something real quick on YouTube. But again, this video should be up later for you guys to rewatch. If you guys missed the formulas and just want to, do this yourself. Okay, going back here, this is much easier than I expected here. All we have to do now is the same setup literally for win rate. So win rate is a longer formula because we have to add winners and losers, but that's literally it. So here, where is it? This is where we change it. So G. I know we're using OB. I'll just name it OB here. We'll go with, and then we'll convert this to a percentage here. And then we will also add this. Oh, wait, hold on. I just realized something. This is in Factoring Pro, but it's counting the window of Pro. Which... We'll see if that works or not. We'll see if this works or not. We'll have to test it out. Not gonna be entirely sure if this works. We just combine the two. That doesn't seem right. Okay. This is my logic here is probably wrong. And then we'll include London session as well. Yep, okay. My logic is definitely wrong here. It's impossible to be at 4%. It's probably because... Oh, no, it's right. It's because the end. I got to copy and paste this. One more thing we have to add before we do that. We have to copy and paste all this here into here. And matter of fact, my ring light is blocking this for now. Let me see if I can see it better here. There it is. Nope, it's not. It's blocking my view. Okay. I have to move my ring light here for a bit. So we have to do that. And that should include all losses with that filter. Now I can't see anything. Those are the wins. These are all the filters up to London session 826. Now I can't see the bottom. Okay. I'm gonna have to move this down here so we can see the rest. That is right. It goes 826 losses, and then you have to do the same thing here. Or hold on, we have to go back here because we already included OB, which is A4. Now we have to do this here. Okay, so 50%, I believe. And this should be right here. My calculation, my logic here, guys, could be wrong here. So I'm not entirely sure on this. How do I unpercent this? Well, this is a decimal. Okay, there we go. Now we'll move this. So the EV here is 2.36 with all this optimization, but we do have to see how many trades this is. So let's see if we can do that here. We just count this. Oh. So, if I'm not mistaken, this should mean there's 16 trades with this model here with a 2.36 EV. So the EV is better, as you can see now that we optimized here. The EV is better than what I currently have. So you see the EV is 2.36. right? My EV as a whole, from trading everything in my setup and my strategy, meaning all PYs, all types of entry models, internal and external trend, my EV is 2.01. So it is about, if you do the math here, it's about a 17% increase in performance. So you can see this is more optimized than my current strategy. Why? Because of the win rate. The risk reward is higher. So the risk reward we optimize extremely well here, as you can see, right? So if we just optimize and take only OB entry model plus only internal trend counter setups plus only London session and only origin, these 4 different things, right? PY type sessions, confluences, entry models. We'll keep everything more standard here. If we optimize all of this, we get 5.7 risk reward. So you guys can see optimization here, right? So the risk reward is great. We've optimized the risk reward very heavily here. This is perfect. Because look, my risk reward average 2.6. After optimization, if we only take this new optimized model here, there's so much more also to my strategy system than just this. If you guys want to learn all of it, I'd recommend getting the course while it's still on sale. But this is just like a basic introduction, right, to my system. It's a basic introduction, because the course will be on sale until the end of this month, and after the end of this month, it is doubling in price. And there's only 2 spots left for course. So next 2 people that buy it get it at the current lowest price possible, and you won't be seeing this price again. So if you just joined, you're new to the channel, and you want to learn my entire strategy, I'd recommend go check it out right now today. But here is the average reward here, 5.7. Optimized. What you can do to see if maybe removing a confluence or filter improves it, actually does. So actually, if we take it within all sessions, not just focus on London session, it's a 6.5. So just because we take the highest on each category doesn't mean it will be high, right? Look what happens if we get rid of OB entry model. It's 5.0. Because OB entry model is a pretty big, I'd say, difference in the risk reward. It has the most impact on the risk reward because that's literally the entry model. So if we just optimize to, we basically just want to calculate this and find whichever works best. Now, here's the only one problem with this. If you see the count here, it's only 16 trades taken here. So out of, because we're optimizing so much, we have a lot of filtering going on here. 16 trades out of 640, you basically are only taking 2.5% of all trades here. So you're taking 16 trades here within the span of 9 months. So no, I would never trade just this, right? But if someone was to ask me, is 50% at 6.5 possible? Yes, it is. Look at the data here. It literally shows it is possible right here. People just don't do the work. So they think it's impossible. They think no way such thing like that exists. It does exist. It's just that the frequency that setup occurs is extremely low, only 16 times over 9 months. Now, what you can do to optimize this is to just over leverage. Now, I don't mean over leverage, but just like leverage higher. Take advantage of leverage, because the EV is so high. You want to take advantage of the high EV. All you do is maybe double, triple, quadruple your leverage per trade, and you can take advantage of the every 16 trades. Okay, just keep in mind a drawdown though. That's the main thing. You don't want to be obviously you're leveraging 50% of your account per trade, because that's 2 trades and you're basically gone, or not gone, but you guys get the point. Since obviously it's proportional, so it'd be 50%, then 50% of the new balance, but you guys get the point, right? Don't over leverage too crazy, but this is a way you can basically optimize your trading. Now, let's say you just want to get rid of London. Right, so far we've only gotten 2 confluences here. Did we miss the origin? We did. I think it's because I got rid of it, right? We'll include it here to see if it improves it here. Oh wow, it does. I think it's because the London, I think, probably messed us up. So we also include London session. No, it's 9 now. What am I doing wrong? OB entry model, counter, internal trend, FF26. What's FFA26? That is origins only and London. Was this a EV before? I couldn't remember, honestly. What did it change? This is a glitch? No, stay the same. Okay. Never mind. I guess I am wrong here. The average risk reward is 9 here. Optimized. So 9 risk reward average. And if you just do the win rate here, this is including everything here. Now this, I'm not going to change too much. If we really want to change something, we could look at whichever one is least important. So, one thing I realized I made a mistake on is the win rate. We picked from the high risk reward section. We should be picking the win rate from this section. So, okay, we messed that up. We want to pick the highest win from this section. So, it would be this. It would be eye to eye, which is internal trend pro. 75% has the highest average win rate. So, we do have that II Pro. Okay, do we have the Impulse 80? Impulse we're not going to use. Well, let's go to the next highest one right here. Stop Hunter. But actually, I don't think we can use separate things. Because if we use the OB instrumental as the average risk reward, we can't just use the win rate of Stop Hunter. It has to be the win rate of OB. So actually, no. We have to keep both things the same. What am I doing? We have to keep both statistical things the same. Same category. So this should be the same category here, which I think it is. London Pro. No, it should be counter here. Anyway, you guys get the point, right? I'm not going to go too more depth into this. My basic point I was trying to make is too much optimization, you get to a very low count. So this would be a count. Total sample. So this would be very low. Like only taking 16 trades in 9 months of data. So definitely would not recommend this. Obviously, most people don't even have the patience to wait for this. Otherwise, you would have a 9 risk reward at a 50% win rate. Had to fix this a little bit, and the EV is 4. But I don't mind taking my 2.0 EV and having high frequency. You have also likely a smoother equity curve because of law of large numbers. But that's basically going to end it for today's stream, man. I hope you guys did learn a lot on the stream. Again, gone over how you can basically do this yourself if you want to. If you just want to get the copy of all this with the rules, calendar, journal, everything set up for you already, check out the private ETU train journal. Because that will have everything really built in for you. You can also look at all my past trades here. But if you want, we can real quick also check out the data here for scalping 1-to-1 win rate. Because I don't think I had a batch this in a while on the 1-to-1 win rate percent for scalping. This is probably something you can do. Like I said, if you don't want to add too many filters, adding too many filters, we end up with 16 trades here. So what we're going to do here, and also makes sense why you have 16 trades if you think about it. Since we're filtering just based on London session here, Sato-san said thank you, no problem, bro. Since we're filtering on 124 trades, 16 out of 124 is a real result, which is like 13%. So we actually want to, let's not filter based on session. I think that limits it too much. And the risk reward is very, very similar from session to session. I'd say there's not much of a difference. We can do the statistical percent difference here. It's like 3.8, 3.5. Yeah, so it's like 8% difference in win rate or risk reward. It's not huge or not too huge. Let's get rid of it. Look what happens when you get rid of London. Boom. You guys see that? This returns the count of a range depending on multiple criteria. The criteria is OB entry model with internal trend counter traits. How many of these have we taken? We've taken 77. So there it is. Now it's looking much better. So you don't want too low frequencies. Now 77, 9 months is still very low, right? That's all right. How many actually, let's not look at the months. Let's look at the total active trading days. So you're averaging about half a trade or 0.7 of a trade per day. So maybe this is still too much optimization. If we included the origin PY type, I wonder what it would be. It'd probably be even, it's going to be even lower. 33, yeah. So you obviously don't want to be taking 33 trades in 111 days unless you don't have that much time. This is actually perfect for you, right? So we're filtering just, let's filter on just based on these two things to keep it simpler here. So we'll take a OB and why did I write external trend pro? And I realized since we can't split it up, that was a logical error or fallacy on my end. I can't just pick the highest win rate entry model and then have the highest RR entry model, because that just means I'll be using two different entry models in one, which doesn't make any sense. I have to stick to one. So the best way really, if we're just thinking optimize it, would just, I guess, to pick the one with the highest EV value. The OB still basically has the highest sample size of impulse is way too small. My win rate for impulse is not 80% long run, so that's why I know that for a fact. It's too small sample size here in my journal, so it's not gonna be entirely accurate there. Let's just focus on OB entry model. That's the highest EV there. What's the highest EV here is internal trend pro. Again, small sample size, we ignore these. So let's make this red. Okay, so these are red, and then now we picked a session. Now session, like I said, limits to only 124 trades is the max total. Considering I've taken 637, that even just limiting based on session already limits you to like 1/5. 124 trades is basically one trade a day on average. So let's not limit by session here, guys. Even though London session does have a pretty big difference here. The sample size, yeah, 124. It's not that it's low. It's just low compared to the other ones. So we'll just put a sample size too small here for London. You preferably basically want to compare sample size that's relative to the other sample sizes. So like you can't compare something with 100 trade sample size to something with 1,000 trade sample size. It just won't be fair. So let's just not highlight these two. I did use a conditional formatting here. We'll get rid of this here. We'll just get rid of all the conditional formatting here because there's some glitches with that. Until I fix that, we'll get rid of them all. So we'll mainly do this. Sample size too small, we select that. Sample size is too small, we ignore these. The next biggest is 3.03. Matter of fact, I shouldn't even be highlighting this win rate specifically anymore. Just because, like I said, you can only pick one. You can't be cherry picking. One for risk reward and one for win rate. It just doesn't make sense. Like, that's like me saying I pick, let's say, trading only in New York session or trading only in London session. Okay, that's not a good example. That's the same as me picking, I only trade origins for my new optimized model because the risk was the highest, but then I pick the win rate percent of flips, which is the highest. Then that means I'm trading both flips and origins, but then that means the risk reward is not going to be the same anymore because you take the average of now the flip and origin risk reward here, which is 4.4 and 5.0. So yeah, definitely not something that would make sense. So you don't have to pick one. We just go based on whichever category has the highest EV. So OB, internal trend pro. Sample size too small here. I'm going to go with New York session guys here, just because it's about the same. And most of my trades are taking New York session. Actually, at this point, we're not going to factor go on session, just because it's not a huge difference. So no optimization on session. Let's just focus on more technical things, which is then we go to Origin, which Origin has the best overall win rate and the risk reward combination. So we'll do that. This is a very good, this should be very good here. So let's check this out, guys. OB entry model plus internal trend pro. And OB internal trend, we want to be doing pro because that's the highest EV in total. And then we lastly want to be incorporating the Origin here, which is A26. So we come down to 37 trades only taken, where we are internal trend pro, using only OB entry model and only off the Origin. So it's not a lot of trades still, even, honestly. But the system should be extremely good considering the EV is very high here. So we'll see whether or not it is 37 out of, again, 37. That's, it's not going to be many trades, guys. So something you want to just keep in mind. So if you just get rid of Origin, for example, you're already up to 86. And this should be correct. If my logic here is wrong, guys, let me know. 86 trades basically where we take OB entry model with the internal trend being pro. So 86 out of 637 trades where I've done that. That honestly makes sense because if you want to think about it, if we just filtered immediately go off OB only, I've only taken 275 trades with OB. So 87 out of 275, we're basically filtering out the OB entry model only section. That's about 31%. So 31% of my OB entry model trades basically have us hitting the Origin. Or sorry, 37, us hitting the Origin and us being internal trend pro. So 37 out of 275. So about 13%. About 13%. Now what we're going to do here is, let's see. We're getting rid of London session here. Again, we're not going to filter based on session here. It'll be decreasing our number of total optimized trades taken too much here. So OB entry model and not counter, we're taking pro here. And is it 1-to-1? I and pro. Yeah, and then F26 should be Origin. Yep, it is. So the average risk reward we got now here, guys, is 4.9, which is obviously higher than my 3.6. Do the math here, that is about a 36% difference. So quite a big of a difference in terms of risk reward difference. So now we've bumped the risk reward average to 49. And then now if we go to the win rate, we'll do the same here. I'm going to delete all this because it is a kind of a mess here, and I'm going to restart. So we got, oh, let's start with the OB one. It'd be easier to do. So first off, we have the OB here, A4. How's the win rate? This is the W's. Now what do? All we do is add more filter criteria here before the W calculations of wins. So we add the calculation of, let me find it here. We'll copy and paste this. And obviously this formula is going to be much easier to write because it's way shorter here. So there we go. Now we're taking internal pro trend only plus origins only. And then we'll do the same for here with the losses. So we calculate this correctly here. I'm gonna have to move my ring light a little bit here. Not get in the way. Okay. That should be good there. So there we go, guys. There we have it. The win rate percent is 68% with this filtering of this new optimized model. And the EV overall is 3.04. Is that a big difference compared to my current EV? Yes, it is. Why? It is literally a 50% increase in EV. So not double, but still 50% increase in pure raw performance of the strategy. The win rate is basically the same as mine. The risk reward just has increased a lot. So you can see this is one way you can basically use your new optimization with this data here. So hope you guys did enjoy this video. I'll do one more here just to show you guys. But you guys should get the point here, right? This is where you can just create new models, number of trades. We're gonna move this column here because this column makes more sense if we just move it here. So this model here, for example, is, what do we say? OB entry model plus internal pro trend, right? Let's see, is that the one we picked? Internal pro trend plus origin. We're not, now the reason why we didn't include kill zone here or session is because not a huge difference between the sessions, ignoring the small sample size here. And that would also just decrease the number of trades taken. Like if you include, but I think I showed this earlier, but if we just include London session, it's basically like no trades. And you still want a good balance of trade frequency, right? Unless you're someone that has no free time and you don't mind staying on the chart just to wait for a setup, sure. But you can see it's only 3 trades, guys. So only 3 trades. So definitely something you want to keep in mind. Like the risk reward goes up just slightly, including in London session. Now, I think there's an easier way to optimize this formula here, so I don't have to change this every time, the entire formula. I believe if I just do no, because then yeah, I'd rather you guys just do this manually, so you can have multiple different types of optimized models if you want. So let's say you want to try something else. We'll try another optimized model here, just an example for you guys. So let's say you want to do say you want to do, again, not going to filter based on session here. We'll filter based on POI, confluences, and entry model. Let's say you want to do something like, okay, here's a good example. Let's say you are someone that wants to take every setup and not miss trades. So you don't like waiting for a retracement for the OB entry model. You like IFGs. So IFG entry model plus confluence of, let's say, let's try the second highest here. So 2.95 external trend pro trend plus, let's say you want to take it just off the origin. First off, before you even want to look at the EV thing and get these calculations, you kind of want to use the count ifs to just count the number of trades where it's following this first. This way you're not wasting time in case it's only a few trades. Again, you preferably would like more frequency. The best option is honestly, like I said, a balance of frequency and EV. So find what works for you. The only problem with low trade frequency setups is you actually aren't really necessarily using less time trading, you're less time taking trades, but you're still spending the same amount of time monitoring your charts for that setup. Essentially, I feel like it's going to be a slight less time, but it's not going to be a major difference or a huge difference. So I would recommend you guys, to go with a frequency that is good. At least in my personal rule, I feel like in general, I'll have it as a comment here. At least one trade a day. Or somewhere around that ballpark. So maybe like one trade every 2 days, but anything below that, I feel like is not as good for your net return. It'd probably be negative net returns in terms of negatively affect your net returns. It'll still be positive, obviously, because their EV is good, my strategy, but it won't be as good net returns in terms of risk reward. Like you probably won't be able to make 100 risk reward monthly. You might be able to make only 20 or 10, but you could have a higher EV than me. A more optimized system with my strategy, combining these filters. However, like I said, the main problem would just be, the frequency. Hence, it will actually play out the EV a lot less. It's kind of like poker or casinos, where the longer you stay there, the more money you lose. If you have a good EV, the longer you play, the more trades you take. With that keep maintaining that same EV, the more money you make in terms of relative to your risk, which is why we talk about risk reward so much instead of just dollar amounts, because someone trading like a 100K account could easily make 10K a month, but someone just trading a 5K only account making 10K a month is a lot harder. So we keep things relative over here so you guys don't get judged based on your account size, because that's not my focus here of the course and mentorship. I'm here to teach you guys how to scale your trading and perform at the level you need to perform at with your given current situation. There's no rush to also scale too fast, right? Until you learn and practice, there's no need to scale too fast. So let's go with external pro trend this time. That is this. And then last but not least, that journal part is origin. So you can see the trade frequency is very low on this. It's even worse, it's 13 only. But that makes sense because I've taken in general only 94 IFEGs. So this is actually 13 out of 94 IFEG setups. So about 13% of IFEG setups follow where it's taken with external pro trend plus this origin. In this case, let's get rid of the origin here. Actually, before we do that, I want to test something real quick, just to see what it's about, what it's like. So we will copy all this here. And I'm going to copy all this and paste this in here and replace it with what I previously copied. So we'll copy this again. We'll copy this part again. We'll put that part in here. And what did I do wrong here? Journal, GG. Definitely did something wrong here. I got to keep the M to M part first. So average risk reward here is basically 3.3. And then if you really want to get the win rate, we can here as well. So we take this part, which is the filter part. You don't want to take the M to M because this is, if you go back to the formula here, if it opens up, guess it won't open up here. This is basically where it's going off, is looking to average the risk reward column. So that's nothing to do with win rate. We want to just take this filter section here and paste it into here. So this, for example, is averaging the win rate, I believe, which is G section. We want to change this part. We don't want to Wait, actually no, we can delete this. We can change this. Don't want to get rid of the W part here. And then also we got to change the rest here. I got to move my thing a little bit. So that's what the journal is. And then last but not least, we need to change this part here. And so it's an 80% win rate. Very good. Very good. 80% win rate. You can see IFGs, if I take all of them, it's a 71%. If I filter it based on just taking only external pro trend plus the origin only, it's an 80% win rate, guys. And then here's the EV. It's 2.4. You can also see it's not as good as the first most optimized one. How I got basically most optimized, and it makes sense, is I literally took the highest EV in each category. That's the quickest way, but again, you want to check the frequency. The frequency for me, 37 trades out of 637 is very low. I'd at least try to, maybe chill a bit on the filtering here. So let's chill a bit on the filtering for the IFG, because a lot of people love trading the IFG setup in a group. So let's do that, and let's get rid of the origin filter. So average risk reward actually goes up a bit here, so you might be surprised, right? It's not always going to be guaranteed that if you pick the highest risk reward here with POI type, you will get the highest risk reward. In this case, you actually got 3.6 as even higher risk reward. Now win rate here, we can just copy and paste this here, and then we can delete the origin part, which should be that. And then once you get used to this, you can figure this out quite fast with these formulas. And then I believe that is all, right? Am I tripping? 92% win rate here. Pro trend and IFG. Pro trend and IFG. Oh, here's the origin part. I gotta delete this. I was about to say. And then pro trend, IFG. So you can see here, let's see what the EV is here. It is a slightly lower win rate, only 3% difference, but the risk reward, because it's higher, it actually increased the EV here. So here's an example of essentially where actually having that higher EV improves it. So essentially here, if you look at the total number of trades here now, this obviously we're going to have more trades because our filtering is less strict. So again, it's not always the more filtering, the better, right? Here's a perfect example of less filtering. Actually, the better you perform. You have a slightly higher EV, not a huge difference, but slightly higher. But the main thing is the frequency is much greater. So that's something to definitely keep in mind. I'll comment that out for you guys that buy the journal. So guys, keep that in mind. This is why you need to test and back test and collect data, man. Collect data. You can see the win rate, the EV is actually higher here, despite, even though it has more trade frequency, 37 trades this time. So 37 trades taken out of the 94, which is now much better. Has almost half the trades taken now. So great, right? So if you guys want a 77% win rate out of 3.6 risk reward, you better get the course. We got 2 people left, or 2 spots left in the course for people that want it, right? And once you learn it, you already have pretty good stats. But again, if you want to optimize further, you can use your journal to optimize further and do it like this way. So yeah, a 77% win rate at 3.6 is possible here. Better than obviously my EV here. But so far, this seems to be the best so far. Now let's try one more thing here before we end the stream here. I'm gonna what I'm gonna do here is I'm gonna move all this down 1, and I want to test here removing the origin from the OB entry model here as well. Because if you look at this, the origin has the best risk reward, but it does have a lower win rate. But anyway, let's just completely remove the PYs from this OB entry model here. Again, we can expect the best risk reward because it's the OB entry model. And we're doing internal pro trend here. So let's just read it. All we need to do is just copy and paste here, right? Very straightforward. And then we just have to get rid of the origin, which should be this part. So the risk reward has gone down a little bit. Makes sense because origin has the best risk reward on average. Now let's check the win rate. Now, if we get rid of the origin here, I'm gonna assume the win rate is gonna be higher, but we'll see. Or maybe probably around the same. Okay. And we have to compare the stats. So this is actually worse. So you can see we actually have a worse EV here. The EV here without origin is lower. But you can see how on this situation the EV here with without the origin is higher. So in this case, you guys can see, like I mentioned, removing the origin filter actually made the system worse for the OB entry model with this internal pro trend confluence, while removing the origin here increased the performance here. So just another thing to note in mind. Now, another thing is, again, like I tell you guys, you need to consider frequency. Wow, there you go. So what do you see now? You want to be taking it without the origin in this case. As in not without the origin, but taking it on all PY types. So from this collection data research here, we can conclude that the PY does not make a huge difference. The specific PY used does not make a huge difference because you can see it's not a huge EV difference here, right? It's hard to compare if you're looking at these two values compared to just looking at straight EV, which is the best value you want to look at. The EV difference is not that big, but the frequency is huge. Huge difference in frequency here. Almost, this is about like, so this is what you want to be taking. What's up, Danielle Lynn? This stream's been going on for like 3.5 hours or something. So if you want to look through my Toronto training journal, then you can feel free to, but I've been talking for quite a bit, so I'm quite tired right now. I'm gonna be honest with you. So I'll try to answer some questions if I can, but a lot of stuff I've answered in pre-streams or in the stream earlier today, if you're asking about journaling and such. But today we're just working on optimization here, teaching you guys for free how to optimize from a journal. So yeah, you guys can see here's the optimization models. We came to these conclusions. That frequency is something you want to keep in mind. Yes, I trade futures. Dinalyn, are you new to the channel? I assume you're new. That's why you're probably asking these questions. I trade futures. I started trading with options. Then I went to Forex and now I trade futures. So that's my gist of my trading journey. But yes, I do trade futures.
too many denied payouts. What forex prop firms are denying you payouts? That is crazy, but I'm not surprised because I've gotten actually banned at a forex prop firm. So I'm honestly not surprised they're denying your payouts. I've literally gotten him straight banned. And they never tell me exact reason why I got banned, but I am just assuming I was too profitable for them and they lost too much money paying me out, so they just didn't want to continue. That's my only guess, because obviously they're not going to tell me straight up in my face, oh, we banned you because of you were taking too much money from us. That would be a bad look for them. So they just never really respond to my emails and just left it at, oh no, what do you mean? So yeah, I'm banned at a forex prop firm. I don't want to throw too much shade at them because they'll probably pay you guys out as long as you don't get too much in payouts. So I won't mention them specifically here, but if you're wondering about my returns, 1% risk per trade, about 100% returns a month. So here's my data from my live trades taken from last year to March of this year. 637 trades, 111 trading days, ad trading days. My EV value, my average reward, average win rate, wins, loss, break even, average my account gain, and then total risk reward is the same because if I'm risking 1% on my account, it's 1% gain. But obviously I'm not risking 1% anymore, so this is slightly skewed or slightly off. So 0.5% you can divide by 2, it's 500% gains. And then these are all the trades journaled, screenshots, everything on here. And then I have everything documented here as well, just for optimization purposes. And then I have some comments I have here in the account balance. Account balance, I just set to 100K because a lot of people are probably trading prop firms. If you're trading like a 100K account, so I just set it initially balanced at just 100K for people that bought the trading journal here. It's on my WAP and on my website. If you're interested, it includes all my past trades. You can study them. So feel free to, but I just set it at 100K because that's a default easy number a lot of people probably use if they're trading a personal account, or not personal account, a prop firm account, because that's what most people are trading nowadays. And I don't blame you. You can get the best returns on your money when trading prop firms compared to a personal. So you start out with prop firms, then you transition to a personal account. But yeah, those are the stats. Equity edge. I don't think I might have heard them a little bit. I don't remember entirely, but just stick with the big ones. Otherwise, yeah, go to futures, man, for sure. There's no spread in futures prop firms. Spread was an issue when I was trading a few forex prop firms. It could get annoying since I don't scalp, but I enter with tight stop losses. Hence why my risk score is like 3.6 average. So it's definitely something you kind of want to be aware of. Futures, you won't have that issue on prop firms. Your money, your trades don't go to the real market, so you won't have liquidity issues and no spread. And the commissions are extremely low. It's basically nothing. So yeah, would recommend switching to futures as soon as possible. But going back to what we were talking about today in optimization, here are the optimized models, the win rate and EV of them. The best ones out of these two, if you're trading my models here, if you want the best for IFVG entry models, for example, it is at 2.58 EV. So you can get basically trading my strategy with these confluences or this optimized model here at a 77% win rate at 3.6, which is insanely good. This is insanely good. My average across everything is 65% at 3.6. So plus 10% win rate at 3.6 risk reward is a huge difference in EV. 2.5 versus my 2.01. So massive gains in performance, especially this one. 68% at 4.9 risk reward average. If you're using my OB entry model I teach with the internal pro trend structure, which is what I teach, and the origins in the course, then you can achieve these results. Now, the only problem, like I mentioned, is the frequency. So your number of total trades with the new optimized model using this formula is going to be a little bit lower, 37. So I recommend realistically, you want to go with the higher. You You want to pick the system, optimized system that has the best EV and the best or the largest frequency if possible. So this is a win-win here, for example. Like these two are win-win, but in terms of winning here, it's not the same, right? The win here is 86% or 86 trades in frequency because you want trade frequency. That's how you grow accounts. That's how you scale. That's how you compound accounts. If you're in prop firms, it's how you can gain more capital. You need trade frequency of some sort to pass more challenges, pass more accounts, just make more money in general. So I would, if I was here personally, this is a no-brainer here. You want to take my IFG entry model with the external pro trend, how I mechanically define structure in a course. This would be your go-to for sure because the win rate risk reward is extremely good. The EV and the frequency are both in line as the best. If you're trading between these two with the OB entry model I teach, it has obviously a higher risk reward average. I personally, looking at the frequency here, I would still pick the lower EV system just because it has 2 to 3 times the number of total trades. So you will actually have and come out with actually a bigger net return. If you want to talk about net return, I'm not entirely sure if my calculation here is going to be correct here, but let me insert one column to the right or to the left. What would this be called in statistics? Net return? I think it's just be net risk reward return. I'm not entirely sure. Let me check. I believe, I'm not correct here, logically, statistically, if you guys have or know statistics of some level, I think it should be like this, but EV is the average return you can expect on average per trade per unit of risk. So 3.04 means you're making an average 3 times the initial risk you're putting on per trade. So if you have 37 trades, I believe net return risk reward here should just be these two multiplied. I could be wrong. I'll check this real quick, but I believe that's how I calculated mine was not using that formula. I was just adding up the total of RR secured here. So it was a different way of calculating it, but let's see if it works here to make sense. 3.6. I don't think it makes sense because that would mean 2.01 times 1111. No, because my total risk reward is 1,003. I can't just take EV value times the total number of trades. So no, it's not that. It is close though. It's very close. Oh, I know why. It's because of break even. I have to multiply it by the total excluding break even because there's no EV that you get out of break even trades. Those are neutral. So it would actually be 326 plus 172. And since this is an average, it won't be entirely precise, but 2.0, I did 2.01. So yeah, perfect. 1,000 basically risk reward. So 1,003 risk reward. If you round it, yeah, that makes sense. So you do take the EV value of the amount you gain per unit of risk, and you multiply by a total number of trades excluding break even, since break even is neutral. So you don't want to include that. So for these, we'll just keep it simple here because we don't know entirely exact break even number of break even trades here. We'll keep it simple here, straight to the point. We'll just multiply these two numbers, and you basically pick whichever one comes out the greatest. The easiest way to determine which system to pick is to go off the net return, and that is just the EV times frequency. So that's all it is. Frequency meaning just the number of trades basically. It's not like frequency in terms of derivatives. It's not like a rate of trades taken. It's just frequency total, number of trades taken total. But you can see here, obviously you prefer this lower system. It returns you 2 times the amount of risk reward despite having only a slight. See, the difference is the EV difference is so minimal, but the frequency difference is so big, it gives you the best return here. So no brainer here. Now let's look at these two. This is also a no brainer. You don't even need to look at net return here. The EV and the total number of trades is the best here. Danielle Lynn said, yeah, first time watching, bro. Nice, man. Glad you found the right channel. There's a lot of fake gurus nowadays that don't have any of this data. That's some really impressive results, bro. I appreciate it. It's years and years and years of trading experience, journaling, hard work. So, it's nothing crazy, but yeah, the results are good because of the amount of time I put into this craft, I'd say probably less than 1% do all this in trading. Yeah, bro, and the leverage on futures are very attractive. Yeah, for sure. For sure. Are you in a Discord? If you're not, join the free Discord. Got some people talking there, trading, all that. And let's do one more optimization before I end this stream. The stream has been going on for like 3 to 4 hours. You guys know that. So kind of losing my voice here. But we'll do one more thing. I enjoy trading, even though it's hard work. I like to look at things in terms of numbers. That's how my brain works. I don't look at things in terms of, opinion. So yeah, we'll go over one more example here of an optimization we could do. So let's get straight to it. We can't obviously, there's no point in optimizing just the entry model because we already have that data here. We already had the data here. Matter of fact, we should probably include net return as well here. But the only problem here, we can do that. We can actually do that because we can just do the count ifs formula for these here. So yeah, we could definitely do that. The only thing is, like, for example, my A plus setup, B plus setup, these sample size is too small, so the 100% winner is not accurate. So I'm gonna personally, we'll keep them on here, but it's not enough data, so I'm gonna delete those actually. Impulse model 80% is not as accurate. It's not enough data here. Let me just delete these rows here. And then this we just started testing. So scalping 1R win rate percent. Look through all trades and go through each one and see what my win rate is if I were to just scalp for 1-to-1 with my new optimized strategy and system, because my system and strategy has been improving through the past years I've been trading it. So it's probably, I'm gonna assume, since I'm at 65% at 3.6 risk reward right now, if I was to just take 1-to-1 at full position and close out, it would probably be like 80% win rate minimum, 85, maybe 90. 90 is still really hard, even if you're trading 1-to-1 though. So it's probably gonna be somewhere around 80 to 85%, which is still very good. So let's now we'll try another optimization here. And there's obviously more columns you can optimize and use here from my journal. You can add some of your own to the journal if you guys bought the journal. But I'm just calculating these today because I don't want to do too much today. We can do another video if you guys enjoy these and find these actually very helpful, because there's basically no traders that actually go through all this data or show all this and go through how to actually improve a trading strategy. If you guys like these, at least subscribe, share channel, leave a like so more people see this content. It makes it more worth it for me to stream or even record these, because it does take a lot of effort to do this. But yeah, okay, so let's do we'll do maybe 1 or 2 more examples. We tried my IFG entry model, we tried the OB entry model. I don't really want to try Impulse just because the sample size is kind of small. Impulse model it's only 11 trades, so 80% win rate is only based on 11 trades. That means one trade can affect the win rate by 10%, which is huge. So it's not, it's sample size is just way too small. We'll just leave it there. Let's try my stop hunter model here. So we do stop hunter model plus, we'll pick a confluence here for stop hunter. Honestly, the trend actually does not matter for stop hunter. The internal trend means nothing for stop hunter. It's irrelevant to the stop hunter setup. So if you see like stop hunter, I don't journal the internal trend for stop hunter setups. External trend sometimes, because that does matter, but internal trend for the most part does not matter for a stop hunter. So you won't really see trend for the most part being journal for stop hunter. Actually, all of these, I think stop hunter, I didn't journal any of the trends or structure here. Let's see. Yeah, so none of the stop hunters basically have the trend journaled. And honestly, if you guys just join, buy and sell does not matter here. It's the same win rate. So 67 to 70% is basically the same win rate. It's not statistically different enough. So why would you get rid of half of your trades when you could be making money on those half of trades? Or when you will be making money because your EV is positive, I hope. So there's no point in getting rid and being specifically buying or selling, even though the S&P has been going up. But to be fair, that's only recent, right? So I'd still be buying and selling. That's not something I would ever filter out based upon, because context matters more. In a bullish market, there's always retracements of pro-internal swing structure being bearish. There's no such thing as a market going in one direction. So to me, buy and sell for day trading does not matter. If you're swing trading, yes, it does matter. If you're position trading long term, 100%, it matters a ton. But day trading, scalping, anything intraday, really, for the most part, just sticking to buying and selling does not really matter. One of my students is asking me a question in Discord right now. I'm responding to him. Give me 1 second, guys. Okay, cool. Again, we're also doing a giveaway, guys. If you haven't heard, 1,000 free members, we'll do a giveaway. One lucky winner will get either the course for free or they get access to the indicators for a year. So 2 great high value items that we're going to be giving away once we get enough members in the free Discord. So definitely check that out. I think a lot of these streams also that I do, when I do these kind of streams, a lot of people don't join. I think it's because it's boring. This is the boring stuff a lot of people just don't want to be putting effort into. But if you want a really good trading strategy, this is what it takes. My strategy is extremely good. It's not some normal strategy that you see on the internet. There's some powerful strategies that traders that trade like 70% at 1-to-1. That's fine. But for me, I'm not going to waste my time trading that when I have a strategy that's so much better than that. So that's why I spend the time optimizing, because I know the time I spend on optimizing, looking at my data, journaling my trades, I'm making that back in terms of monetary gains instantly. So stop hunter model, let's do, since trend doesn't matter here, as confluence, we'll get rid of all those. We'll do, we're not even going to do inside or outside kill zone. It's not a huge difference. Actually, it kind of is. But stop hunter, we've only taken like, only taking 84 trades. So it's going to limit it quite a lot. And I don't think I journaled the POIs for stop hunters either. Yeah, so it's just going to be stop 100 model plus inside kill zone here. And then, yeah, that's all we're going to look at. So we'll look at this. We'll basically compare. All we're doing here is comparing stop 100 model outside, just taking both inside and outside kill zone versus just taking it inside kill zone. Let's see the difference. So we'll copy the formula we already created to save us time. This is the part where we change here. And what we change this to, got rid of it, whoops. We changed this part to, where is it, stop 100 here. We want to take this. This is the definition of stop 100 here. And then we want to take the inside kill zone value, which is this. We're going to have to do this instead. If I'm not mistaken, yeah, this is right. So the average risk reward taking stop 100 inside kill zone is 3.3. If you want to expand this out, yeah, it's basically 3.3. What does this round to? So it's basically a minimal difference. I would say this difference means nothing here. Now, the main thing that would carry this optimization here would just be the win rate. So let's check it out. So that's copying the old win rate system there. Now we gotta just copy this here. Since this is the new filter. And then we take this here, do that, and then we take this here and do that. Oh, okay, I did it wrong here. Let me check this formula here. This is inside. Strategy inside kill zone. Strategy. Oh, wait. No, that's right. That's right. This should be, oh, we missed this. That's all we needed. 83%. What's the win rate here for stop 100 in general? 72%. So that is significant. That's a 10% difference in win rate here. So you can see, we just drag this down now. The expected value, guys, is now 2.57 for stop 100. When before, if we're taking outside the kill zone or taking both inside and outside kill zone, it is about 2.05. This means that if you take stop 100 outside kill zone, it 100% brings down the EV. You can clearly tell, right? Because this is including just inside. If you include outside, it will become 2.05. So in terms of stop 100 setup, it performs better inside the kill zone. So stop 100 performs better inside the kill zone. It's a 2.57 risk reward average or EV. Now let's look at the number of total trades taken here. If we just do count if formula. I actually don't even need to copy that, honestly. I just write it again. 40 trades. So what do you guys see here? 40 trades taken here. So if we were to compare these two models here, you'd say they're actually very similar. These are basically the same. So you could just, matter of fact, you could just take both of these two. If you want to trade both and want more trade frequency of 37 plus 40, you can just take both of these trades with these two confluences, the entry model and the confluence that I teach in the course, right? Because it's basically actually the same EV here. Like, look at this. That return's basically the same, but huge difference here. OB entry model plus internal pro trend, huge edge. Massive edge here. Net return is massive. 245 versus 100. It's more than double. So definitely something to keep in mind. And obviously this is trash. Why is this trash? It's not trash in terms of it's a bad strategy. It's still a great strategy. Everything I teach in the course works. It's just that the frequency decreases too low. It's 13 trades frequency. Right. So that's something you want to keep in mind. Again, frequency is important too. You don't want to filter too many trades out to the point where you only take like 1 a month or 2 or 10 a month, right? Still need a solid sample size or trade size or trade amount, I'd say. So that's one of the things. If you want to journal or optimize or look through one more thing before I end the stream here, I was just going to do this where I include the net returns here. For these that are not optimized, so this is stuff that's completely raw data. Just breaking down if you're just taking all entry models or the breakdown of confluences and the session averages, you just do net returns here. So we just do something like this. This would be EV. And oh, one more thing. You can't really do this yet. We got to do this. Number of total trades. So we have to do this and then we get the net return. So for this, it will be count ifs. And then we just do IFEGs. That's column G. And then it should be this, I believe. Let me check. It's not that. Okay. I did it wrong. Oh, I know why. And then there, 94. It should be 94. Yep, it's 94 as you can see right here. So it's 94. And then if you do number of trades here, count ifs of journal. This is G to G. This is OB. 275. Just make sure it matches my data correctly here. 275. Yep. And as a matter of fact, right here, all we're going to do is just change these. So this is called impulse. Again, only taking 11 trades in impulse, so it makes sense why the stats are so high. Stop hunter 84. Yep, there it is. So we got 6 likes on the video so far. Let's try to get the stream to 10 likes before we end today. Tons of free value here for you guys. Completely free. 3.5 hours long. Again, if you guys want notifications for next streams, remember to just subscribe and have notifications on so you get notified. So 84. Now all we do here, like I said, take this times total number of trades. That's our net return. This is not considering, this is considered break even, unfortunately, but we're not gonna, it's not worth to calculate the exact specific break even data. So we take this as a generalization here. That's very accurate still. So you can see the net returns here is obviously, you can see how frequency makes a big difference. Now, to be fair, this is the best here with the most number of trades taken, 275. And it has the best EV, so it makes sense that the net return is so huge here. But as you can see, let's compare, like these two are still very similar. EV is basically the same between IFG and Stop Hunter setup, the two setups I teach in the course. And then you can see the net return is about the same because the number of total trades frequency is even about the same. So not bad there. And we'll just do count ifs real quick for basically these other ones here. I think there should be an easier way to do this quickly. Yeah, we can just do it like this. So 187. And then that's average. We just want to count here. So this is 120. External trend taking counters. Is this right? Yes, it is. 120. 187. Yep, that's correct. Okay. All right. So I'm confident enough to just copy and paste the rest here because it should be correct here. Oh. Why does it do that? Okay. $330 inside? Yes, it is. And outside we got $944, which is definitely wrong. So something's wrong with this formula. Oh, how did that turn into sum? That was weird. There you go, 220. Okay, all data is matching correctly. So yeah, all you have to do here is just take these, multiply by this. Oh, I already knew what I was doing ahead of time. Perfect. So we just drag these down. It just converts each one through reference. And there it is. And I'm going to reset all these here. Reset this. Number of total trades here. The most is inside kill zone, which makes sense here. And then the net return, whichever has the biggest return, obviously inside kill zone because that's a bigger category than the trend categories. But yeah. And then if you look at the EV here, inside kill zone, it's a better EV, it's a higher EV, and more trades taken inside kill zone. So hence why taking inside kill zone always outperforms. As you can see, here's a perfect example statistically. Right? If you don't have the data in front of you like this, you wouldn't ever know this. Because trust me, when you're trading actively, you won't actually know how much difference a confluence will make to your trades unless there's a huge win rate difference you might be able to recognize over time. But without the data written down on a piece of paper like this or on somewhere, objectively, it'll be hard to tell. I'm gonna move my mic down. I think it's covering my face a little bit. Hopefully this is better. Not sure. My ring light is still bright. Okay. And then we'll just basically do the same here. You know, we already have this data here, you know, on the front cover of the journal. This is not right. 1,600. Oh, I know why. It's because the rest of the sessions here, I just have it set to autofill New York. So let me delete all the rest of here. Oh my gosh, this might take a while. There we go. If I just delete all these, we should get rid of that issue there. Okay, cool. I just have it auto set as fill in New York just because that's the main session I trade. So there it is, 308, which should be correct. 308, yep. Okay, I'm confident now in everything else here. So we just copy and paste the rest here. And this is just count number of trades taken within this criteria here, which is just within these sessions specifically. That's all it is. Why is this red? Don't know. And then that returns. Hopefully Excel can just guess what I'm trying to do here. Let's see. Nope, it cannot. Okay. Here and that returns here. Obviously New York session I made the most. Makes sense. I trade the most New York session. And it may not have the best EV, but it's close. The sample size to London is just a little bit small. But obviously my strategy works in all sessions regardless. Now we can do POIs. And then for this back test, we'll do it maybe in another video or I'll just do it in my own time. Just keeping track of how often my trades just go 1-to-1 and get a 1-to-1 risk reward win rate just to be curious. If I ever want to, like say for example, just trade 1-to-1 scalping, if it's like a 90% win rate, I can use the power of leverage and understand there's a better Sharpe ratio in a high win rate strategy So I can utilize leverage to my advantage and just double my risk or triple my risk, for example, potentially on a 90% win rate setup. So I'll have to check this later. It'll definitely take a while. You got to go back through 640 screenshots of trades like this, for example, and go through each one to determine essentially how, if each one got to 1-to-1. So yeah, it'll be a lot of work. That's probably something I'll do probably later at some point, but not right now, because that'll be a boring stream. You guys wouldn't be learning anything. I'll just be going over all my trades. So let's copy and paste this formula here down here. Delete all this. Let's make this easier. Okay, and then we can just do a count here. $19, and we'll double check this because I already have the data here. 1984. Okay, it's the same. All right, so this is correct data here. Oh, I put an underscore by accident. 131, and then this is 76. So from this data, in terms of just pure PUI, the best return is the Origin. Now, why? It has a best EV in terms of average risk reward and win rate, but it also has the most number of trades by a lot. Huge difference. So it has the benefit of both worlds. If you're comparing things, if it has a better EV and a more trades, it's guaranteed to have the bigger return, or biggest net return, obviously. The reason why I'm looking at EV, or I created this EV column, you guys can check out my website. It has an EV calculator, does it all automatically for you. Here's a formula if you don't understand EV. It's something used in poker, casinos all the time. Anything that requires statistics is used. It's a pure performance metric, and it basically helps you single out your data into one number or numerical point, instead of having to try to guess this combination of the average risk reward and win rate to see which one's better, right? It does everything for you. All right, so now we've done this, right? We've gone, number of trades, we got net return, so we kind of know net return of each entry model with the specific confluences here. So like, let's say you're trading, you want something optimal, you'd be like, okay, New York session gives me the most number of trades, it saves me time, potentially, not necessarily true, but it gives me the best here. It has a solid EV. Does it take New York session as number one, and then for confluences, you want to look for the best confluence. Let's say, okay, you find the best confluence is inside kill zone, right? Then you would take trades inside kill zone. And you can see, obviously, it works. Inside kill zone here, with the stop hunter model, your EV is 2.57 instead of, without that filter, it's 2.05. So there's a difference there. This is how you're able to view data. This is just some comments I wrote for you guys that bought the journal, so you can read through it if you don't understand this. We'll do one more thing, which is just inside kill zone calculations for all the entry models. So we'll do OB entry model plus inside kill zone, because obviously from our data, we can tell the inside kill zone compared to outside versus inside kill zone, there's a 25%, I believe, difference in EV, 6% difference in win rate, slight difference in risk reward. But over time, that does add up, right? That can cover all your commissions and fees that you pay easily. So we will do this right now. And then we'll do IFG entry model plus inside kill zone. So these are just like ways, if you guys just are not good with your psychology, you want something more optimal, maybe less trades taken, that's not a problem with you. You want to optimize the best. This is how you literally optimize your trading strategy. Exactly what I mean by when I say I use my trading journal and use my data and optimize my strategy and find things and confluences that better improve my system over time. So this is what you guys should be doing. The bare minimum of, if you're unprofitable, the bare minimum is to journal all the trades, like fill out all these columns. That's the bare minimum, right? To actually make useful or make this actually useful is to optimize and look through your data. Now, some people might just find no optimization and just journaling useful just for the psychology. If that helps you, sure. For me, it helps me in terms of psychology just by understanding my data, knowing that over the long run, 1,000 trades or 637 trades, I come out extremely positive. So if I just follow my edge and system and strategy I teach in the course to you guys, which is a crazy value right now, it's only $399, and the price is going to double next month. So if you don't get it now, you'll miss out on that. But it just shows that if I just stick to my system, I'll get these crazy results, and that's what I've been getting. So there it is. Let's go to OB entry model here. We'll calculate the average risk reward here. The OB entry model is going to be this formula here. Oh, we'll copy this down here, and we'll also copy this down here, but obviously we just have to change this first section and replace the OB, because this is originally IFVG set up here, or stop hunter here. So this is OB inside kill zone. This is going to be IFVG inside kill zone right here. So that's 3.4. This is 4.9. So let's check the risk reward differences here. 3.4 IFVG entry model. So risk reward is basically the same. I'd say it's not much different. OB entry model inside kill zone risk reward is also not a huge difference. The only thing that will change the EV here now is just the win rate basically. So let's look at the win rate, guys. So we'll take the most basic formula here, convert this here, and then replace this with this, because everything else stays the same. Actually, we don't include the M part. What am I doing? We just include this part because we're just counting here. We're not taking the averages. So replace this, and we replace ultimately this. So 68% win rate with the OB entry model. The OB entry model inside and outside kill zone average is 60%. What does this mean? This means clearly that when we take the OB entry model that I teach you guys in the course, outside kill zones that I specified to you guys, your win rate is going to decrease from 68% to 60%. So if it's decreasing from 68 to 60%, let's look at the EV now. So look how powerful my trading strategy is. You get a 3.03 EV just from trading and only focusing on taking trades inside kill zone. So you go from a 2.5 to a 3.03 EV. So just by spending literally 10, 20 minutes here, set up these formulas, and you can use the ones I have. I have this entire journal template built for you guys with all these subsheets, rules, calendar, everything, so you guys save time and you have to don't do as much as I'm doing right now, and just get the same results, right? You get 3.03 EV now if you just take trades inside the kill zone versus outside kill zone, 2.5. What's the win rate difference? Almost 10% win rate difference, 68% versus 60%. So you guys can clearly see there is a difference, guys. There is a difference. Now let's look at IFG inside kill zone. Let's do it. Let's do it. This is going to be the last thing, guys, before I end the stream. It's 4 hours long. I'm quite tired, so we'll end this today. But it is a weekend, so no trading for me, obviously. So that's why I have this time to just do whatever. We're going to... Oh, I already have the IFG written here. Inside kill zone. I already got that. Oh, snap. Okay. All right, cool. We just have to do this then. Copy and paste this. Copy this. Replace wherever it says OB with that. So here as well, we replace that. And we replace this here. So the win rate with IFG is, this might be lower, 63%, 71%. So in this case, you can see with the IVG entry model, taking it inside kill zone actually decreases your EV. So you would not know this unless you're collecting data, man. So as you can see, it's actually decreased EV here. You know, different entry models, both taking inside kill zone. One decreased the win rate, the other one increased. So you can clearly see without data, you wouldn't know this. So maybe in the future, for example, I want to take IFG entry models actually outside the kill zone, which is maybe contrary. But then again, here's the thing. We don't have enough trade frequency. That's my bet here. Let's check the trade frequency here. Because if we don't have a lot of trade frequency in sample size, this actually doesn't mean anything. So let's count this here inside, obviously, but we have to change this to, instead of A6 is IFEG. So 56, preferably around 100. Let's change this to OB. And this should be the same thing here inside Killzone GG OB. So this is statistically a lot. 161 is a 3 times difference. So we kind of want to see a bit more data here on IFG entry models taken inside Killzone before we can come to this conclusion. But we want to, since we go for the one with the higher sample size, which is this one, we're going to assume in general inside Killzone will increase your win rate. Right? Because this has the most sample size. The one above with the stop hunter, it also increases your EV. Right? You see it's also increased EV. But it's only 40 trades. So 161 is a lot more. This is going to be statistically a lot more stronger in our data. So here it is. There's the net returns of each one. So in conclusion, after we've done all this optimization, we can say once we get enough data, but for now, inside Killzone improves the win rate in EV your system. If you want to take the best optimized system and have a solid amount of trades, it's the OB entry model with internal pro trend. And then for the IFEG, the best so far we have connected so far in terms of the model that's most optimal is the 2.58 EV, 77%, 3.6. That's when you take external pro trend with the IFG entry model. Anyway, that's it for this video. Hope you guys did enjoy. I'm going to end it here. I know it's been a very long stream. I was not anticipating this to take 4 hours long to do, but it did. So here it is. If you guys really want to support the channel, check out the trade journal template. Okay, I have it literally on my WAP and also the course as well. So you guys can check that out. It includes literally all the formulas of everything here, along with all my past trades. If you just want to figure out my strategy yourself without paying for the entire course cost, you can as well. Just know that the course, again, only 2 spots left for the course before the price doubles. So something you want to keep in mind. But yeah, that's basically it for today's stream, man. I don't think there's anything else to hear. I'll probably screenshot this to the Discord. Just to show everyone the stats to end the stream here. So yeah, hopefully this helps you guys. I'm gonna see if I can post this as long form content on YouTube. Probably not though, because this is a very long video. But we'll see how that goes. All right, I'm gonna hear y'all. I'll see you guys in the next stream. Catch me in the free Discord. If you're not in the free Discord or in the course, get that, and I'll see you guys in there. Peace out.